Morning everyone again, to you and also to our live stream that is starting. We will start today with a lot of keynotes with really interesting stuff around blockchain, around decentralized finance. We're going to speak, we're going to have a brainstorming after lunch. So we have a lot of interesting stuff, but as we start every day, I want you to ask to stand up. Stand up, don't be shy, stand up. For those of you that you were here yesterday, you know the drill. So stand up, stand up, stand up. Stand up, stand up, stand up, stand up. Look at this side of the room. Everyone from this side, from this side. Okay. And now stretch your hands in order to reach to the guy in front of you and massage his back a bit. Yeah, do a little massage, don't be shy, don't be shy. Don't be shy. And now turn on the other side in order for everyone to have some massage. Great. Super, super. Now that you are relaxed and ready to start, we can start. So please sit down. I will start by thanking our funder, the State Department and the Bureau of Cultural and Educational Affairs, World Learning, and of course Kent University that hosts us here, and you are all here to support this event. And without further ado, I would like to call on stage for our first keynote, Professor Pehlivanoglu. A huge round of applause and welcome him on stage.
My presentation is here, right?
Yes. Let's have the clicker.
Thank you very much, Dimitris, for introducing me, and also I'm very happy to have this chance to speak in front of this valuable audience, including our students over there at the back, and my colleagues in the front row, and thank you very much for attending. So today, we will be discussing the following topic: enhancing corporate transparency with blockchain, the future of beneficial ownership disclosure. Of course, in order to discuss this topic, we need to first of all understand what beneficial ownership disclosure is, and then we will follow and understand how we can use blockchain. I'm saying blockchain, but you can understand this in general as all decentralized systems, by the way. So I am a legal scholar, of course, and my knowledge about technology is limited. You guys probably know better than me. But I'm trying to show how you can use the developments in legal regime for your benefit to create some technological developments, softwares and products. This is the purpose of this presentation. So today's agenda, we will be first looking at this issue of beneficial ownership disclosure by looking at a news which you already knew from a few years ago. Then we will discuss the beneficial ownership concept through the lens of corporate law, because beneficial ownership is a general topic which is evaluated not only under corporate law, but also, for instance, under real estate law or for movables, all immovables. And then we will be looking at the European Union's legal regime on beneficial ownership disclosure as an example. And from there, we will be starting to understand the new role for technology, how this legal regime now enables you guys to think about new roles for technological products. And we will also look at some examples, some conventional methods, and how blockchain can be used here, and we will be having our concluding remarks about the matter. So, I believe you all know what Panama Papers is. So this is a controversial topic, by the way. So I am not using this news in any way to offend any nation, by the way. Let me clarify that as a disclaimer. But this news is something which will be attracting your interest. That's why I'm sharing it. And if you read through that news, you will be seeing that many policymakers, prime ministers in the past, because of this Panama Papers incident, were under attack by the public worldwide. So what was this Panama Papers issue? Do you remember the Panama Papers incident? Can you raise your hands, the ones who are remembering it? Okay, unfortunately only a minority of the class, the conference room right now is remembering what the issue is. So please allow me to give a brief summary. So Panama Papers was a journalism incident. And through this incident, we were able to learn that people are forming companies in offshore jurisdictions, not only companies, but legal persons in offshore jurisdictions, and using these legal persons for their benefit. Sometimes this benefit is escaping from paying tax, and if you do this too excessively, then this is known as tax evasion, of course. Sometimes this is used for bad stuff. What kind of bad stuff? Like money laundering, like corruption. And sometimes though, these offshore structures are used for relatively good things, for instance, to preserve your confidentiality. Okay, so there are both good usages and bad usages. But at the end of the day, of course, what is the problem with these offshore structures? The problem is that you do not know who owns those offshore structures. And if you do not know who owns those structures, then there is always a possibility that these structures are used for bad actions. So that's why after this Panama Papers incident, we were unhappy. We said we need to somehow create a way to know who is behind these legal persons, such as companies. Because if we do not know who is behind, then if these legal structures are used for some bad actions in the future, we won't be able to determine who is guilty and who is not. So this is the starting point, and this is why Panama Papers is important. So then this concept of beneficial owner came into our life. Beneficial owner can be best understood, this concept can be best understood when you compare it with the concept of legal owner. So for instance, how do you determine the legal owner of a real estate? How do we do it? We go and we look at the land registry or real estate registry. Right? You will look at the registry and you will see the legal owner. So the concept of beneficial owner is saying the following. A person who is listed as the legal owner of, for instance, a property, or this can also be a company, in the registry may not be the actual owner of that company or real estate. So for the concept of beneficial ownership, what is important is that you need to determine the real owner, not the legal owner. And the real owner is called as beneficial owner. Why? Because that person benefits. He is the person or she is the person actually benefiting from that ownership. That's why it's called beneficial owner. So in the context of companies though, this definition gets a little bit complicated. So I will be using the definition of Financial Action Task Force, for instance. They say in the context of legal persons, beneficial owner refers to the natural person who ultimately owns or controls the customer or the company. You can understand it that way. And by the way, you in your private lives, I believe, encounter with this beneficial owner determination procedures all the time, because I believe you all have bank accounts. And whenever you go to banks, they start the process of KYC, know your customer process, and they start to ask you many questions. So why are they asking you those many questions? Because their primary objective is to determine whether you are the beneficial owner of this bank account or not. So this is how you are getting in touch with this topic in general. So let's continue. Again, Financial Action Task Force provides us a definition about how to determine beneficial owners of companies. They say countries may use an ownership threshold to determine beneficial ownership based on ownership interest. For instance, 25% can be one of the thresholds you can use. So then, for our purposes, Financial Action Task Force says, if someone owns 25% or more shares, then we can call this person the beneficial owner of the company. Okay, this is their point of view. And how do we collect beneficial ownership information of companies? Well, their recommendation is to create a central register in all jurisdictions, and the information about beneficial ownership of companies will be filed to this central register. So, I believe it is quite clear for now, right? Do you have any questions up until this point? Okay. So, then we are collecting this beneficial ownership information in a central register. This is being filed. We understood why it is important to collect this information. Let's look at the EU legal regime and how EU then is collecting this beneficial owner information. So, EU says member states shall ensure that corporate and other legal entities incorporated within their territory are required to obtain and hold information on beneficial ownership. So they basically say the same thing with the Financial Action Task Force. Okay, understood. Then they say member states shall ensure that those entities are required to provide information on the beneficial ownership to entities when the obligated entities are taking customer due diligence measures. Okay, so let's read the third one and then summarize. Member states shall require that beneficial owners of corporate or other legal entities provide those entities with all information necessary for corporate or other legal entity to comply with requirements. So basically EU law says you need to, as a company, collect the information about your beneficial owner and then provide this beneficial owner information to any entity which is obligated to collect this information. And of course, then EU law will also say that this information should be registered in a central registry. So, I told you that this issue is very important, this excessive secrecy, also in my opening remarks. And you know, Daron Acemoğlu recently won the Nobel Prize, so this is among the topics which he and his colleague also highlighted in one of the articles this year that they published. So you can look at that article also. You can just type Daron Acemoğlu excessive financial secrecy on Google and you will be able to reach to that article. These are only some parts from that article. So this is not something only I am claiming. That's why I wanted to mention this. So EU law then also says the following. You should be using technology actively in the context of company law. Okay, what is the vision of EU and how can we combine the EU vision about technology and company law with the issue of beneficial ownership disclosure? So let's start to build up on our knowledge. So EU says in one of the directives, member states shall ensure that online formation of companies may be carried out fully online. So then establishment of companies fully online is something important for EU. Secondly, there should be some electronic identification means. Okay, this is also something important. And thirdly, they say, okay, filing papers are important, but then any paper filing should be converted in electronic form as well. And if we connect this issue with the beneficial ownership filing, we see that EU is saying that there should be a central register in each member state in order to collect the beneficial ownership information. So then, where are we heading? Let's understand the trajectory here. Central registers are important, EU is saying. We need to collect beneficial ownership information in those central registers. But when we are collecting that information, we need to make sure that we are benefiting from technology. How will we benefit from technology? Well, first of all, we will convert all paperwork into electronic form, and we should somehow make it electronic, all the process electronic, right? This is what EU is saying to us in summary. So then, dear participants, there is an intention to make this whole trade registry and central registry process online. And beneficial ownership disclosure is only a part of this. And today, we see that in many jurisdictions, this beneficial ownership information is filed by beneficial owners or the companies in an online form. And central registers are collecting this information in an online form. But what is missing here in these conventional methods? Two things are missing. You know, EU is saying electronic identification means are important, and we are seeing that in many jurisdictions. I'm not talking only about EU, by the way, worldwide. In many jurisdictions, the paperwork that is filed through these electronic systems are not verified accurately or sufficiently, let's say. So electronic identifications of the papers which are filed to prove beneficial ownership is something you should be thinking on. Because there might be a need in this area to create a technology which will be enabling lawmakers, authorities, and private institutions to verify, to cross-check the information stated in the beneficial ownership disclosure forms. This is something we should be thinking about. There are, of course, right now, some products which are used by authorities and private institutions to do this verification. And to understand why I am proposing you to think about creating a technology like this by comparing the conventional methods with unconventional methods. So here you see two examples, two software products which are developed in order to verify the information filed regarding beneficial ownership disclosure. I have my small disclaimer here, by the way, so I am not endorsing these products, to clarify. But these are well-known products, that's why I wanted to use those as an example. So right now, for instance, when you open an account at a bank, or when you provide the document to a private institution, a company, in which you are a beneficial owner, how will the company be verifying your identity information or the documents which are shared by your side? Well, they are using some private softwares, like these two. So in those private softwares, they are able to check whether the document you filed is a correct one, your ID card. They look whether it is an accurate, a correct, genuine ID card. And also, secondly, if the product allows them to do a good search, they can check whether the beneficial ownership information you are providing is correct. But of course, this is very tough to check. So that's why I'm saying technology has a new role to play here, because your disclosure might be inaccurate, or there might be a missing information about the ownership chain that you are disclosing. Because recall, beneficial owner is not the person we see on the records, and this beneficial ownership can also happen indirectly. For instance, you can own or control a company through owning or controlling another company. So then we have an ownership chain here. And who knows whether the ownership chain that you are declaring is correct? Okay, so this is the tricky part. And technology can be used here in order to verify the information someone provides. So these are known as KYC and entity verification products. There are many other products, as I told you. So we are in need of having a software for this verification process. Secondly, of course, the EU's intention to create this fully online central register is something which should be taught in connection with these softwares that I'm mentioning. Because how are central registers working at the moment? Well, for instance, in our jurisdiction Turkey, you are filing an application through an online system. Of course, the online system is cross-checking your national identity, whether you are the person who is filing that application. But regarding the documents which you are showing as a proof, how are they checking whether those documents are genuine or not? Well, generally, those papers that you are filing is notarized. So this is applicable to many jurisdictions. It is just an example. But when you increase the number of ownership chains that you have, as I mentioned, then the number of paperwork that you are providing is increasing, and the number of fraudulent actions that an authority, a state authority might be facing is also increasing. So they also need some kind of software to verify the information provided. Then this need for new technology in the area of beneficial ownership disclosure is something needed both from the side of private institutions and state authorities. And of course, the legal regime is there to support you. For instance, Delaware recently, the US state of Delaware recently allowed companies to keep their stock ledgers, their register of owners, by using blockchain technology. So this is something to your advantage as persons looking forward to develop a technology perhaps. And the number of states in the US allowing this is increasing, and worldwide we also see some other examples. And for instance, by using blockchain technology or any other decentralized technology, if you keep the owner information recorded on this blockchain technology, then you will have three main benefits. First, you will have the chance of immediate reporting, because when the beneficial ownership information of a company changes, since the blockchain system will be automatically recording it, then you will have immediate recording and you will be able to protect yourself from those time lapses. Secondly, the verification process will become easier. Thirdly, there will be an increased security. So then using technology, as you can see, can help us in curing the problems that I just mentioned by this conventional method of beneficial ownership disclosure. So, my concluding remarks. First of all, corporate transparency, this is the general issue that we are discussing here. The information of beneficial owners of companies is an important topic. Why? Because it is important to fight corruption, crime, tax evasion, and so forth. Secondly, though, we need to acknowledge that despite the legal rules that I mentioned, beneficial owner secrecy is still an important problem because the legal regime is insufficient. I have a book about this subject, by the way. I'm not going into the details at the moment, but know that it is still insufficient. Thirdly, the beneficial ownership information disclosed, collected, and verified insufficiently because of the reasons I already mentioned. There are challenges for private institutions who are obligated to collect this information, as well as there are challenges for companies who are trying to find out who their beneficial owner is, and also there are challenges for state authorities. And by summing up all these facts, you should be reaching to the following conclusion. There is a new role for technology in the area of beneficial ownership disclosure, and software companies are trying to work on this at the moment. And if you are interested in this field, you can create a product in order to make beneficial ownership disclosure better. So, this is all. Thank you for listening. It's my pleasure to have this chance to speak. Should I leave the stage or wait for any questions they might?
Thank you very much. Do you have any questions? I see questions here. Okay. So I will give you this microphone. I see a lot of questions, okay?
Okay.
Ladies first, sorry.
Thank you. My question is about international law for blockchain and Bitcoin. I wonder that some governments try to forbid Bitcoins and blockchain area, and they can do that. Yeah, you know, some have a big power about it, can try it and can do that. But is this issue regulated in international law?
This is all, I believe. Okay, thank you. So first of all, there is a misunderstanding about blockchain and cryptocurrencies in general, because blockchain, from the perspective we understand, is something different than cryptocurrencies. So our professor, Volkan Yücel, will be, I believe, mentioning this difference between those two from the technology's perspective. So regulators, first of all, should understand that these two topics are different. So right now, yes, there is a tendency in many jurisdictions to prohibit usage of cryptocurrencies because of fraud issues. But then there are also some legislative actions that we are observing in, again, many jurisdictions trying to allow this cryptocurrency investment. So those two things should be taught and structured differently. This is the first thing to understand. And secondly, of course, there is no international law prohibiting the usage of blockchain technology. Is there an international law allowing usage of blockchain technology? We don't need to have such an international law because it is within the authority of states to allow it or not allow it. Right now, the discussion about allowing it or prohibiting it is based on the threat of fraud. And if regulators get satisfied and if technology reaches to a level which will be easier for us to detect fraud, then I believe in the future it will be allowed. But still, you know, in order to control what is going on in those systems, you need to tie it somehow with the state authority. So this is where it is getting complicated.
Thank you, Dr. Murat, for this presentation. Alexander, IT Geek here. I have a question that is not fintech or blockchain related about beneficial owner. Can the concept of beneficial owner be like legal owner is our parent and beneficial owner is us as kids? Thank you.
I will give you a lawyer answer. It depends. So, for instance, yes. Let's say that your parents own the house that you are all living in together, and then you have a side agreement with your parents stating that you are the actual owner of the house, and yes, in this case, you are the beneficial owner of this house. Of course, the legal nature of that side agreement, again, is very important, but it is out of context here. That's why I'm not going into the detail. But you can use a trust structure, for instance, if you are located in Britain, let's say.
One last question. And your parents can leave this house in the blockchain, so.
Hi, so this is just a distinction, and I know you're focusing on the EU, this is just a distinction in the US. One of the reasons in several, and this is also in several jurisdictions, that one of the reasons that in the US, so we're one of the ones that you can't actually use blockchain for beneficial ownership, but we also have this distinction in street name, where you have the ability to shield ownership so that you have, for example, stockbrokers that hold ownership in the broker's name, but it doesn't actually, it doesn't reveal the ownership of the holder themselves. That is both good and bad, right? So one of the problems, and I'm not sure if the EU, and maybe you can address this, has anything that deals with privacy. So not everyone wants the direct ownership of a particular investment revealed publicly. And particularly in private investments, they don't necessarily want the ownership of a particular investment revealed. And whether or not that's held in street name, because for brokerages it can change very fast, particularly if you're a trader where your ownership could be particularly brief, or if you're holding private interests and the fact of your ownership can have an impact on price. So, and dark pools actually also have shielded interest because that can move markets. So how would you address this when you have transparency concerns?
You are from the US, right?
Yes.
Okay. So that's a good perspective. So I think we need to provide some additional information for the audience to understand the background of it. First of all, that issue is correct, and that is though reflecting the perspective of publicly held companies. So that issue of holding the stock in street name is an issue which is related to publicly held companies, because in that context that is becoming important. In the context of Panama Papers and this beneficial ownership disclosure matter though, what we are concerned is about privately held companies. Companies which has one or two, a couple of shareholders. Why? Because a publicly held company is already under too much attention. and it is under the attention of Securities and Exchange Commission and other securities authorities worldwide. So in the context of those companies, we are not very curious to understand who the beneficial owner is, because those informations are already disclosed to the securities authority. So there is nothing confidential or shady going at the back of that. No, beneficial ownership is disclosed to SEC. So okay, but beneficial ownership information has a threshold, as you can see. Same in the US, same in the EU. So if you are proposing to change the definition of beneficial owner, that's something else. But the beneficial ownership information is disclosed in publicly held companies already to SEC. Of course, you can complain about whether that definition is sufficient or not, but it is already an information disclosed. That is what I am trying to say. In the context of private companies, though, this information was not disclosed at all. That was the issue. So that's why the attention of regulators was and still on private companies. And as I told you at the beginning also, publicly held companies are already under attention. So the shady activities that they can do is seen less risky because there is already attention. But you can use a private company for any kind of shady activity because the regulator attention is less. So I hope I was able to make that distinction between those two.
Those are actually already revealed, and I don't know if we can talk about this privately, but those are already revealed in state filings. So that stuff is already available separate filings in the US.
Yes, so we are saying the same thing, I believe, yes. So regarding all the issues that we discussed, my discussions are based on private companies rather than public companies. I think, thank you for that clarification, by the way. Maybe this was something I should have said at the beginning to avoid any confusions.
Thank you very much. A huge round of applause. And now we are going to understand the local fintech ecosystem. I will say his name wrong, Dr. Yücel. Okay, welcome him on stage. Thank you very much.
Welcome everybody. I've just learned that you are just streaming on YouTube. So I changed my topic and content to be secured. And to be secured again, I will be almost reading my text because the fintech is more political than you can think. Today I will be discussing the fintech ecosystem in Turkey, focusing on its rapid growth and significance. Fintech or financial technology refers to the use of technology to make financial transactions faster, more efficient and cost-effective. It brings convenience and accessibility to both individuals and businesses, simplifying financial processes and broadening access to essential services. In Turkey, the fintech sector is really expanding rapidly. Many companies and banks are actively adopting new technologies to enhance their financial services. Turkish banks in particular have embraced the digital banking new system, offering customers the flexibility and to manage their finances anytime, anywhere. In this presentation, I will explore the core components of Turkey's, I don't know how to say Turkey's or Turkey's because we changed our name, fintech landscape, the roles of banks, startups, scale-ups, investors and regulators. Additionally, I'll delve into the challenges and opportunities that shape this dynamic field. Thank you for your attention, and I'll look forward to sharing more insight about the topic with you. Fintech, what is fintech? Fintech or financial technology involves using advanced digital tools and innovations to improve the efficiency, speed, affordability, and financial services. What is the purpose here? The goal of fintech is to streamline financial activities, making them more user-friendly and accessible to individuals and businesses alike. Why fintech? Because fintech, it provides people business with digital tools that make managing, investing, and transferring money simpler by focusing on convenience and new ideas. FinTech meets the need for flexible, technology-based financial options suited to today's digital world. Since we have time shortage, I'm just omitting some part. Sorry for that. FinTech and its core areas. First of all, payment system. This area encompasses credit card payments, mobile payments, solutions, digital wallets, and even cryptocurrencies. I just remember your question. What is the difference between cryptocurrencies and blockchain technology? Cryptocurrencies is just money, coin. Now we have 3 million coins you can buy, and every day we have many. But the blockchain technology is something like internet. Internet is called generally Wide Web. It is integrated whole and one thing. But blockchain is not one thing. We have many blockchain systems, and we need many bridges to put them together. For example, you can't put Solana and, for example, Mantra together. Why? Because we need a bridge. So in a while, we will have many bridges. So we will have one blockchain system. Okay. Another title, lending services. FinTech enables digital platforms to offer credit assessments and lending services, providing users with faster credit approvals and competitive internet rates compared to traditional banking. Digital banking, very important for Turkey. Digital banks or neobanks operate full online, eliminating the need for physical branches, money transfers. FinTech companies make transferring money more affordable and faster than traditional banks. For example, Western Union or PayPal. By the way, PayPal is banned in Turkey. We don't know why. Investment and wealth management. Robo-advisors and online advisors. Online investment platforms democratize access to investment services, providing users with algorithm-based recommendations and automated portfolio management options. Insurance technology and blockchain and cryptocurrencies, I just mentioned them. What about insurance technology or InsurTech? This segment of FinTech enhances the insurance sector by simplifying processes like applications, price comparisons, and claim tracking. We have several advantages of FinTech: speed and accessibility. FinTech solutions provide faster and easier process than traditional banking services. Lower costs. FinTech generally offers more affordable transaction fees. UX, mobile and web-based solutions make FinTech highly user-friendly. Innovation, of course. FinTech drives digital transformation and innovation within financial services, creating efficient solutions. What about Turkish side? Evolution of financial technology from the Ottoman era today. Financial technology in Turkey has deep roots going back to Ottoman Empire. During this time, basic financial services like money exchange, credit systems, and trade financing were developed. The Ottomans created early banking institutions that supported trade across their empire. In the 19th century, formal banks appeared in the Ottoman Empire, laying the foundation for Turkey's financial system. After the Republic was founded, Turkey continued to modernize its financial system by establishing the central bank in 1930 and later adopting digital banking. In recent decades, financial technology in Turkey has progressed rapidly. Internet banking started in the late 90s, followed by mobile banking in the last decade. Today, Turkey has a strong fintech sector supported by a tech-savvy population and a solid banking. Digital wallets, mobile payments, and innovative startups in areas like blockchain and peer-to-peer lending make Turkey a regional leader in fintech. Let's talk about the fintech ecosystem in Turkey now. Turkey's move into digital finance started in the late 90s, as I mentioned. As internet access and smartphone use grew, digital banking became a regular part of daily life in Turkey. Major Turkish banks invested in mobile and online banking, allowing people to manage this money easily from their devices. Companies helped shape the fintech industry in Turkey, meeting the needs of country's young population. The rise of fintech startups in Turkey has become a key part of the country's innovation ecosystem and transforming financial services. So this growth is driven by factors such as increased internet access, a huge population, and proactive regulatory measures by the Central Bank of Turkey to create a favorable environment for digital finance. The Turkish fintech sector stands out for its collaborator nature as well as its fast growth. Traditional banks increasingly partner with fintech startups or scale-ups to expand their services and reach a broader audience. Yes, you can check the numbers. For example, last year we have reached the number 637 companies, startups or scale-ups. In the last decade, there has been a significant increase in the number of fintech companies in Turkey. There are about now 637 active startups across various areas, including payment solutions, digital banking, and decentralized finance. Let me show you briefly the titles or logos of our system. These are the applications for payments. Again, payment, bill payment, collection, money transfers, banking. These are not just applications of banking. These are the startups supported by banks, okay? Traditional banks. Again, infrastructures, banking, application providers, card operation service providers, credit scoring, alternative financing, corporate loan, insurance, very important, crowdfunding. Crowdfunding is maybe the only solution for developing startups now in Turkey. Investment, personal finance management, asset management, portfolio management, big data, very important issue, sentence and others. For example, Eczacıbaşı Center for Blockchain is really important. They are publishing articles, books, reports monthly. And lastly, crypto, very important. What about the investment in the sector? Turkey's fintech ecosystem has shown rapid growth in recent years, both globally and locally. Market size is valued at around 15 billion now and growing at a rate of 14% per year. These firms focus mainly on areas like payment, mobile banking, and digital currencies. This growth highlights Turkey's position as a promising hub for financial technology development. You can just see the size, but these are the investment rounds, sorry. Key startups in Turkey in terms of fintech. Papara, maybe the best one. Papara is well known for its digital wallet and peer-to-peer payment services. EasyCo, maybe you all know that brands. A leading company, payment processing. It offers secure online payment options for businesses of all size. Inanal provides a prepaid card that lets people without a banking account make payments both online and in stores. What about the other sides in terms of banks? Garanti, Akbank, and Turkish Bankası, very important traditional banks. supporting new technologies, guarantee a strong mobile app. They have a strong mobile app that offers a variety of banking and investment services. Akbank, known for its advantage digital banking and easy-to-use mobile app. Türkiye İş Bankası, actively investing in digital services, including mobile banking and AI-driven features to enhance customer experience. Payment system and digital wallets. Turkey's fintech ecosystem is thriving, especially in payment systems and digital wallets, with a young population that prefers digital options over traditional banks, services like Papara and Initial I mentioned. These digital wallets let users make fast and secure transactions even if they don't use bank accounts. Digital wallets in Turkey are popular for allowing easy peer-to-peer transfers, bill payments, and online shopping, very important. With lower fees and easier access than traditional banks, these platforms have become part of daily life in Turkey. Digital banking and alternative finance solution. Turkey's banks and new fintech companies are meeting the demand for digital banking with fresh solutions. Alternative finance options like peer-to-peer lending and crowdfunding are also growing in Turkey. Maybe this is the only solution for startups to reach the biggest capital. These services give people and small businesses more funding options beyond traditional banks, boosting financial inclusion. The move toward digital finance fits with Turkey's larger digitalization trends, supported by both private companies and government initiatives. Blockchain and crypto technologies. Turkey is highly active in blockchain and cryptocurrencies, with many people using digital currencies compared to other countries. Turkish consumers dealing with economic challenges, and they see cryptocurrencies as a new investment tool. This interest has helped local exchanges like BTC Türk or BTC Türk and Paribu grow quickly, giving Turkish investors access to various cryptocurrencies. Blockchain technology is also being explored in Turkey outside of cryptocurrency. Sectors like finance, supply chain, and public services are looking at how blockchain can make transactions more transparent, secure, and efficiency. Of course, there's an issue in blockchain system. If you need speed, you will get rid of security, and vice versa. The Turkish government is interested in the technology too, working on regulations to support blockchain growth while protecting consumers. So I just omit that part and come to regulations. We have some new regulations. You can check them here. Turkey's fintech industry follows rules set by the banking regulations and supervision agency. We call this BDDK, but maybe you can check titles here. BDDK and the Capital Markets Board, SPK, and the Personal Data Protection Authority, KVKK. KVKK, similar to GDPR, protects personal data in fintech sector. As more people use digital platforms, KVKK enforces strict data protection rules to prevent misuse. This support builds consumer trust, which is essential for Turkey's fintech growth. So what about challenges in this sector? There are some regulatory barriers. Some fintech areas, like peer-to-peer lending, are not yet allowed in Turkey. However, pressure from the industry and global developments may lead to new regulations that allow these services. We have now a regulation, but it's something like a guide for regulation. It's not passed whole now. Regulatory challenges in Turkey and RegTech initiatives. RegTech is just regulation technologies. Both government bodies and financial institutions in Turkey are adopting RegTech solutions to manage compliance more effectively and reduce regulatory risks. RegTech in Turkey is particularly useful for automating tasks like identity verification, as John said, transaction monitoring and reporting. This helps the institutions meet regulatory requirements more easily. By using RegTech, Turkish banks and fintech companies can improve compliance, lower operational costs, stay competitive, and strengthen consumer trust in digital financial service. Let me mention another important agency here. Yes, Istanbul Financial Center. The Istanbul Financial Center is a major government project to make Turkey as a top financial hub in the region with modern infrastructure and tax benefits. It aims to attract both local and international fintech companies. This center will support Turkey's financial sector, promoting cooperation between traditional banks, fintech startups, all scale-ups, and regulators. Supportive government policies also help create a positive environment for fintech growth. Through regulatory reforms and funding programs, the Turkish government encourages financial innovation. These efforts, along with the Istanbul Financial Centers, show Turkey's commitment to becoming a key player in the global fintech industry. What about capital access and investment shortage? Access to capital is a big challenge for fintech startups in Turkey. Although the fintech ecosystem is growing, many startups struggle to get the funding needed to expand. International investment in Turkish fintech is limited due to concerns about economic and regulatory risks. The lack of capital slows startup growth and limits innovation in the sector. Many good ideas remain undeveloped because of low investment. Turkish fintech companies often look for alternative funding, like crowdfunding, but these options are still limited. Solving this issue would help local innovators compete globally and boost Turkey's role in the fintech industry. I will omit international competition and also artificial intelligence and come up to conclusion. So what is the future path of Turkey's fintech ecosystem? Turkey's fintech ecosystem has strong growth potential fueled by its tech-focused population and fast digitization. The future of Turkish fintech will likely include more use-advantaged technologies like AI and blockchain in regular financial services. As digital banking becomes more common, new startups will emerge in the sector, creating innovative solutions that will gaps the left by traditional banks. However, for steady growth, Turkey must address issues with regulation, funding, and talent. We are losing many talents, many engineers day by day. Strengthening the regulatory system to support innovation while protecting consumers is essential. Also, building a strong pool of tech talent and improving access to funding will help Turkish fintech companies reach their full potential, positioning Turkey as a leading fintech hub in the region. Turkey is well positioned to become a fintech hub for the Middle East and Europe due to its location, young population, and growing digital infrastructure. The Istanbul Financial Center aims to attract international finance companies, boosting Turkey's role as a regional fintech leader. By encouraging innovation and creating supportive regulations, Turkey can attract global investments and talent to its fintech sector. Government support is also key to Turkey's goal of becoming fintech hub. Policies that welcome foreign investment and initiatives can develop local talent and startup will help build a strong environment for innovation. As Turkey strengthens its fintech industry, it has the potential to lead digital finance and connect Eastern and Western markets. Thank you for listening.
Thank you very much. Thank you very much. Do we have any questions? I see 2 raised hands. Give me just 1 second.
Yes.
Good morning, everybody. Thank you for your nice presentation, Professor Yücel. You described the ecosystem of fintech in Turkey, and with many elements and data. And we have to do the same work for Greece. I'm from Greece. My name is Nikos Astrolakis. I'm a PhD economist with affiliation in Independent Authority of Public Revenue and Hellenic Open University. So I may find you later to talk about your specific research. But my question is more practical. In your presentation, you discussed about the regulator framework in Turkey. My question has to do with a practical thing. Is this regulator framework consistent with the global and European regulations? For instance, I don't know if you know, you don't mention it, MiCA regulation. And if not, if it's dependent, from where is the regulator framework's origins? Thank you very much.
How? Sorry?
From where derived these regulations, inspired from a global and European framework or from others, other countries or nationally?
Mm-hmm. So, sorry, I couldn't get your voice, so this is why I asked Can Hoca. Law is not global, actually. Law is just local. If it is global, or if it is, how can I say, a real fact, then we can obey. But in Turkey, for example, why we banned PayPal? We don't know why we banned it. Because it's really harmful. If we need to sell a product abroad, we can't, because we can't get paid. So this is an issue, and we can't take the Turkish system part by part. It's a struggle for law in general in Turkey. So we are just struggling. And since you are just, I see many foreigners here, and you can talk freely, but we can't. After this speech and organization, we can find each other and talk, okay? Sorry.
Hello, short question. Is Wirecard Turkey still a thing? It still exists?
I couldn't get
Yes, I see on your presentation in the banking sector that there been a Wirecard logo. So if you know or not, if the Wirecard Turkey is still a thing, if it still exists, because the mother company is defunct, because there was some fraud and some espionage and this stuff, but you have still the logo in the presentation, so I want to ask if the Wirecard Turkey as a subsidiary of the Wirecard is still existing in Turkey and still doing business.
Yes, there are some solutions, of course. Very limited. Yeah, it's active. Yeah.
Thank you very much. And now the time that we all waiting for, coffee break. So we are going to have a coffee break until 11, and I'm waiting you here at 11. Thank you very much. Thank you very much.
Thank you. Hello to everyone. It's Erol Özgüner from Istanbul Metropolitan Municipality. Let me give a little bit information about Istanbul Metropolitan Municipality and Istanbul first of all. I think we have some foreign guests and I hope that last 2 days was okay for them in Istanbul as an experience. I know that you had chance to visit some of the historical places or some natural beauties of Istanbul. But at the same time, as I follow from the WhatsApp messaging group, no one preferred to use any vehicles in Istanbul because the hotel and the venue area is very close to each other. So on foot, our guest chooses to reach here. So it's also good because these days, especially October and November, it's very dense traffic situation in Istanbul because our load is already enough for Istanbul after schools are opened, back to school and back to university period started. So Istanbul has officially 16 million population, but unofficially we have 2.5 million refugees. We are getting this number with the data analytics of water consumption last 30 years and the population changing. So it is showing us that 2.3, 2.5 million refugees every day living in Istanbul. And daily visitors, national and international, is almost 1.5 million. So at the end, daily population of Istanbul reached 20 million. So it's very crowded city, one of the most crowded 10 cities in the world. And as Istanbul Metropolitan Municipality, we have one big main governmental, local governmental organization and 32 subsidiary companies. The number of employees is 100,000. So also municipal organization is very huge organization. To serve 20 million Istanbul citizens and visitors and to serve all the municipal and subsidiary services, as you guess, it's not 1, 2, 3 services. So there are so many mobile and web services in technology side. So to gather all of them and to manage all of them from one perspective, it's not easy. Because of that, we are trying to follow all the new technologies and we are trying to adapt all the technologies to our municipal services for making our citizens' life easier and more quality life for them. So blockchain also is one of them. The main idea for using blockchain actually for the municipal services, as I mentioned, we have so many municipal services and our citizens trying to reach them. For each of them, one username, one password, because citizens' verification with Turkish ID or any other verification points is very important for us. Because of that, let's assume that there are 100 municipal services. It means you need 100 username, 100 passwords. So it's not easy to keep all of them in your mind or follow the chains of passwords. So blockchain is a kind to use blockchain for the digital ID actually is very important for us because of some important things. These are security and privacy and then efficiency, of course. Because of that, we are choosing to use blockchain technologies. So today all of us uses so many different applications and technological solutions. So for each of them, we are using username, password, we are defining all of them. Let's assume, I think all of you has more than 50 mobile applications in your mobile phones. And most probably 10 of them is the most used. The 10 or 15 of them rarely, and some of them once in a year or once in 2 years, but still it's in your mobile phone because one day you will use it. But in any case, we are defining ourselves to there. And for defining this, we are defining username and password. So actually, we are creating multiple credentials for each applications. So we are giving all our information to so many different places. This is a very fragmented situation also. So what is bringing these fragmented situations? Inefficiencies, so huge security risks, and concerns of privacy. So these are the result or outcome of the daily habits of ours. Here we are using for our services digital ID and digital wallet. Because of that, we are using decentralized identifier system, which is also compliant with the W3C standards. As I mentioned before, to unify the ID data, enhance the security, and even last session, our professor mentioned about fintech world of Turkey. So KYC is the one of the important issue. Normally, technology world defines KYC, know your customer, but municipalities are non-profit organizations, so I define KYC, know your citizen, not customer. So this is valid for us also, KYC. So to define this decentralized identifier also, we are following KYC procedures too. This is very important too. And compliance and data privacy is our prioritization. So actually, this is one example, a little bit easy technical level, not so deep. You can think that like HTTP or HTTPS, how we are using DID. Here DID, instead of DID, we can use IBB or IMM, Istanbul Metropolitan Municipality. For example, the ID method can be login or sign up or sign out, something like that. And then we are using the ID method specific identifier. This is an only example how decentralized identifier is defined technologically. And then when we enter this, of course, we are getting the result of ID, type, controller, and the others also. After authentication, we can think like that. Simple the ID document was that. What are the benefits actually to use this identifier? First of all, enhanced security. This is very important and one of the key elements of using blockchain also. And user privacy, cost efficiency for the especially municipal point of view, operational costs of the municipality, and then interoperability. This is very important because this is the technological environment problem actually. You are producing one technology, but this is not available for the other. Let's give an example. As an hardware world, you are buying an iPhone and you need a charger, but you cannot charge your Android phone with iPhone charge. So you need to carry always 2 chargers. So this is a problem actually. I don't want this. If I have mobile phone, I should use any charger for charging it. So this is a problem. Maybe I can give an example like that. So benefits, I said that privacy, cost efficiency, interoperability, and we are using blockchain technology. For privacy, all the control of users' data belongs to user. And if, as a user, you define your ID, digital ID, your, let's assume that Turkish ID, your diploma, or your rental contract, or any e-governance barcoded documents you can put to your digital wallet, and you can select which data you want to share. So it is fully compliant with the GDPR and KVKK, which is in Turkish part. And for cost efficiency point of view, administrative cost is getting reduced, and you can follow the operations in streamlined. This is very important. Yeah, I mentioned about interoperability, and via blockchain technology, we are reaching immutable and secure identity verification. So, how it works? First of all, if you want to get DID, you are sending a request, user request for getting DID. Then we want you to get identify and verify this. And then I will extend this example. DID generated, storing on the blockchain area, and after all this approval period, you are getting DID from blockchain technology. This is an issuance. And for management part, to store, update, revoke DID is possible. So always you can display DID details, submit update when you want to improve or add any other information to your DID. And also when you make update, blockchain updates your DID too. And to reach another services, to access to another services via blockchain is possible too. I will give real examples about this. Here I need to introduce one of our super app, which is called as Istanbul is Yours. Istanbul is Yours gathered all municipal mobile applications, which is being more often used by the citizens. Today we have more than 90 mini applications inside Super App. First, you are downloading Istanbul Senin, Istanbul is Yours. And then for the Turkish people, we want them to introduce themselves, name, surname, and Turkish ID. And then via web services, we are connecting to Ministry of Internal. We are verifying this Turkish ID, name and surname is valid and real. So when we get that, yeah, this is real, directly we are turning back to user and we say that your request is approved, you have an Istanbul Senin ID. So in our super app, it means there is no fake users. All is real, all is verified by our internal of Ministry of Internal databases also. So this is very important. Then we are opening a new world to our citizen, because can you imagine you are coming to Istanbul from Greece, you want to buy Istanbul card for transportation, but you don't know that you can use this card also shopping or any other payment where MasterCard is valid. Or it can be a debit card, you can even transfer money to your Istanbul card too. So you can get all the information in one platform. After that, maybe we will notify you. You know, if you are here, if you are in Istanbul tonight, there is a very beautiful concert which is very close to Taksim area. If you want to attend this, you can buy a ticket from here. So cultural activities offer, or touristic activities offer, something like that. In 2.5 years, our super app is downloaded more than 5.3 million users, and 3.8 million of our users is already verified. And all verified users daily uses more than 2.6 mini apps. I mean, they are not entering to Istanbul Senin and only using one mini app. No, average 2.6 different apps is being used. So this is also good for us. Now the time for us, for Istanbul Senin, to create a digital wallet and digital ID via blockchain technology for getting seamless user experiences with the integration, leveraging existing KYC data, and then of course, I will repeat this too many times, security and privacy also for the users. So, how it will work? We are activating Istanbul Senin account, and then there is mini app digital ID inside the Istanbul Senin. Directly, this is redirecting an app to digital ID. Request permission to share data. This is very important because all belongs to users. Then user approves and display terms for digital ID. One more time, we need user agreement. So when user agrees, this data come to the municipality databases as a KYC data. Then to mint digital ID NFT, and then we are informing to user success response. This is creating a digital ID for user. And utilizing or managing digital ID, we have already NFT minted digital ID, so we are open QR code for reading this. Our user utilizes all digital ID for services. If you want to update or change your digital wallet addresses, this can become as a request, and then log into digital ID management platform, then change the wallet address, because sometimes people doesn't want to use in-app digital ID. So they want to keep MetaMask or any cold wallet. So they don't want to keep anywhere their digital ID. But this is a little bit lack of confidence to municipality. We didn't face off this kind of things, but mostly users can lose or forget to their password or digital wallet addresses. So that time they want to prove themselves for changing the wallet address. When update is successful, user continues to use your new digital ID, and all the blockchain networks updated the related parts. Actually, why we try to do this? For municipal services, I mentioned that municipal organizations is non-profit organization, so there is no positive EBITDA trace, or there is no how I can create benefits from the citizens. No, this is not in our mind. We are trying to make our citizens' life easier and more quality life for them. So let's give an example from Istanbul. We have two subsidiary companies. One is in charge of water management, İSKİ, and the other is gas distribution company, İGDAŞ. So if you want to move from A to B, you need to deactivate all the subscription at A, and you need to activate all the subscription, water, gas, electricity, internet, and the others for the B. So İSKİ and İGDAŞ is under control of our municipality because they are subsidiaries. So what we are tested and now launch in our Istanbul Senin, 5.2 million Turkish ID is already in the digital wallet. So I created for them digital ID too. And if our citizens put their contract at A and B, and if I can verify that Turkish ID number written on that contract, I will accept that this is a valid contract. Because name, surname, and Turkish ID is already same with the digital wallet owner. So I accept that, it's okay. And all the responsibility belongs to users, by the way, because they are taking the responsibility. So what I need for deactivating subscription and activating, I need Turkish ID and contract. So citizen is choosing Turkish ID and existing contract. I am creating at the digital wallet via digital ID a smart contract, all the information including the digital ID, and I'm sending to İSKİ and İGDAŞ deactivate this subscription. I am not sending all the information, all the documents. Actually, blockchain is useful for us here. So then I am choosing one more time Turkish ID and new contract, and again via my digital ID I am sending to İSKİ and İGDAŞ for activating at the new address, new subscription. So it takes less than 60 seconds. Why I define third-party services? For example, electricity distribution company, private sector is managing this, or internet services is managed by private sector. So I'm waiting for that. All the electricity distribution company, internet ISPs will come to us. This is perfect marketing time, by the way. I know somebody that will move from A to B tomorrow or the next week. So as an ISP, great chance to catch potential customer before the others. So with Hakan also, we are working on this, how we can get these potential customers probability and to serve to third-party services. Because of that, this wallet and digital ID integration for the third-party services, this is an example, but then sky is the limit. I don't know, we can use this for so many different examples too. But for now, my brain muscles works for municipal services. It's only focused on that, how I can serve municipal services easier, flexible, and of course in secure way. That I try to explain a little bit. There is a business owner and he wants to register to our Istanbul Senin. In Istanbul Senin, we have, I said to more than 5.3 million users. And we have a digital marketplace inside the app. So to download more than 5 million users to achieve this, I think so huge marketing costs to reach to more than 5 million people and to persuade them to download your apps. But this super app is already open a market, digital market to especially startups and scale-up ecosystems. So they want to register their business to the municipality. They are using their digital ID. With the name and surname, we are integrating company information too. And then we are knowing, here is the name of the owner is Kemal. So Kemal is either citizen and the owner of one company. So I know them with their digital ID also integrated. Aylin also has digital ID and trying to access municipal services. As I mentioned before, like electricity distribution company or water, gas, she doesn't need to introduce herself to them. I already know, I already verified, and the notorious is belong to Istanbul Metropolitan Municipal. So Aylin doesn't need to go for subscription to internet, give your ID, give your address, give your contract to electricity distribution company, internet company, water management, gas management, something like that, or whatever else. If she will apply to, she's seeking a job, and she has CV and diplomas in our digital wallet. So when I created digital ID for her, she can choose her CV for applying to each job. So she doesn't need to send this one by one. Only via her digital ID she can share so many different companies this. There are some examples. I can share the presentation after that. Actually, for us, for our top management, this is very important, that data-driven decision making, because of population of Istanbul. Life is very fast, very quick, very high adrenaline every day. So there are so many things happening in Istanbul. So to make a decision via data-driven is very important for making more accurate decision. This is related with the data also, how you get it for making right decisions better. Because of that, how we can protect our data, which is compliant with the GDPR and KVKK, it's very important for this kind of secure data and safe data management point of view. And for also analytics, when we use the cloud storage services, it's helping us to leverage the business also for the user data. It's very open to expand, especially for the businesses. This is also very important. These services will allow us to create this kind of wide area region. I think Istanbul will be one of the good examples for this in 2025, because citizens will start to use more and more, and they will, when they get accustomed to use more, I think they will force us for new use cases, because maybe today to use cases, but some of our citizens or users will reach to us for using this technology for reaching new potential customers or business owners. With this technology, you don't even need to obtain API keys or approval, because most of the time we are living problem API gateways, and we are waking up in the morning, oh, there is an API gateway problem, so 100 municipal services is not working. It's a very dramatic beginning of the day, actually. So here we are not using API keys, only we are transferring digital IDs with the digital ID provider. I'm passing here too. Yes, here potentials for the providers and for the integrators. For providers, can be government authorities or trusted third-party businesses. Here, Istanbul Metropolitan Municipality and related subsidiaries, and unified ID management for reaching all the services in secure way. For the third-party companies, one of the most key issues, GDPR compliant, especially for ID management. This is very important. So we are serving to them. For integrators, it can be integrated any services. Last slide. No more GDPR responsibility. No more periodic password resets. I forgot it. Give me your mail or phone number. I will send an SMS to you. Two-factor, multi-factor authentication, something like that. We don't need. No more fake users. This is very important. There is no fake users. And access to global cloud providers services, better user experience with the QR sign-in. I think I caught my time. Okay, that's all. Thank you very much.
We have time for one question. Do we have one? We have more than one. Okay. See, he is first. So we will take two. Okay.
Hello, thank you for the presentation. I want to ask, what kind of a blockchain are you using? Is it permission-based or is it a public blockchain? And where is the code open source? Has it been published to the public authorities?
Two answers will be, we are using our private blockchain because of municipal restrictions, and we are using on-chain platform, which is created by Turkish developers. So we are working with them. No.
And I have a question. What about the right?
Sorry, one more added in. I support open source, but I always failed to use open source because of hacking systems. In one way, they are scoring to us. Sorry.
Yeah.
Sorry for
the
it.
question is, what about the right of being forgotten?
Sorry?
What about the right of being forgotten? Yeah, so you are collecting information about people, yeah? So you mentioned GDPR, for example, and so on and so forth, responsibilities, which frame the way companies or different kind of organizations use the data, my personal data, yeah? And among of those rights, usually the right of being forgotten. So I share some information with you, and at some point of time, doesn't matter why, I want to be forgotten in your databases, and especially in the blockchain and so on. Did you consider this, and how you are dealing with it?
Let's assume that you shared with us your graduation certificate. And it's written that, for example, you are electronic and telecommunication engineer, but it's a certificate. So when you allow us, we are sharing only with your digital ID. He is electronic and telecommunication engineer from this XXX university. We are not sharing your certificate. If the company wants this originally, that time with your permission, we are sharing it. Because this is only digital ID communication. Like I wrote that. ibb.login. Blah, blah. That's all. We are adding your information to the end of it.
And can I request to be forgotten in your system?
Of course.
Because blockchain means that nothing can be forgotten.
No, this is private blockchain.
Yeah, but still.
No, it's integrated questions. So this is true. Because of that, they are separated mainly public blockchain, private blockchain. Public blockchain, nothing can be.
Okay, so my question is, did you consider the use case of people want to be forgotten?
Yes.
So I can request?
You can request. I only looked at you requested to me. That's all.
Thank you very much.
We are governmental officers, so.
So I want to invite on stage Taras in order to discuss about the future of decentralized finance. Can I have a huge round of applause for Taras?
Hi guys, let's talk about money. And how can you earn money? How can I earn money with you? So it will be a huge topic. I believe everyone wants money, love money. About me and what we expect today. So I'm a general partner at 3X Capital. We are an investment fund who invests in a pre-seed and seed stage. So the main benefit from me is to get $250,000 for your startup. And I really suggest you to think about your startup if you didn't start it so far, or if you can suggest me any startup where I can invest my money. So I built 2 companies so far. First company I started in 2016. I work with brands like Massimo Dutti, Bershka, BMW, Renault, Hilton. I was working in mainly European Union, in Italy, Spain, Germany. Then in 2018, I got a contract from Google, and I started to provide services for Google in Europe. Then I also got a client of Apple, and we were improving their maps across the European Union. Then in 2021, I decided, okay, I'm enough for this business, and I stepped out. I did an exit, and since that time, I'm developing Strix Capital together with 2 other partners. As I mentioned, we invest in early stage startups. So what benefits I can bring to the table? It's a QR code, so if you have any ideas how we can cooperate, what we can do together, today, tomorrow, or in nearest future, you can find my social and text me. But I can give you 4 examples how can we cooperate. So first one is to get funding. So if you require funding, I can help you to get it. I already mentioned amounts, but I also suggest you to get some grants, especially if you're building on a blockchain. Right now you can get funds from Solana, from ICP, from other blockchains, and you can get up to $100,000 for your idea and not getting investors on board. Because when you get investors on board, you are giving your equity, you are giving your tokens, usually with valuation below you want to exit. Everyone wants to have a startup to at least 1 billion valuation. Yeah, you want to have a unicorn and sell your startup at 1 billion valuation. When you're getting investors on early stage, you're usually selling your equity for 3 million, 5 million, 7 million valuation. So you are giving your equity almost for free if you're comparing to your unicorn value in the future. Second one is to get a job. So if you're looking to get a job, I can help you. We have some open positions within our fund. In startups we invested. So far we invested in 54 startups. And second opportunity is about getting a job. Third one, it's partnership. So if you have any ideas how we can partner, you can text me. And the fourth one is expertise. The question to you, so who probably wants to get the funding for his startup right now or in nearest future? Please raise your hand. Okay, cool. So we have around 10, 15 startups. Who wants to get a job right now or in nearest future in blockchain space? Okay. What other ones? Okay, everyone is already wealthy, with a good job, great startups. Let's also talk. I want to hear your success story. Cool, so I will try to mix some information with market data. Already we talk about DeFi a lot, so I don't know, we can quickly go through the slide and we will move forward because we had already like 2 or 3 speakers mention DeFi and what is bringing to the table. But what I want to point out, so it's statistics based on October 27, it's total value locked. A lot of startups who are looking to get funding, they trying to draw a market size. Market size of 100 billion something. So when we are talking about DeFi, it's 86 billion right now. And as you can see, in 2022, it was even more. So it was around 150 billions, something like that. You need to understand this metrics when you're thinking about DeFi and what you can get out of it. The rise of DeFi. So basically everything in DeFi right now was built on Ethereum. Arbitrum, Optimism, and other L2 blockchains, it's everything on Ethereum. Right now, trend is coming to Solana, to MEMS, and other stuff. I don't like it. I don't like MEMS, but it's also a trend why different TVLs are rising up and DeFi are booming. Because right now, Solana is #1 blockchain in last 30 days, it raised the biggest amount in terms of DeFi, and it's mainly due to memes. I know, who are following meme trends? Can you raise your hand? 1, 2, okay. So we are not wealthy here, because right now, if you're wealthy, usually you invest in meme tokens. I don't invest in meme tokens, so I'm not wealthy. About core components of DeFi, why you should understand it. You should understand it because when you want to build a startup into DeFi world, you usually will use something out of it. So you will use blockchain technologies, you will use your smart contract, and of course, you will probably build a DAO. Who believes in DAO? Okay, better, yeah. I don't believe in DAO right now as much as I believed a few years ago. The reason why, because a lot of projects, they are raising a token just to build a governance. And it's bullshit. Because governance right now is not working as it should work. I hope that it can change in nearest future, but right now, DAO sucks. Key services. So when we are looking into DeFi, what we can expect? We are looking into decentralized exchanges. I like them, but I use Binance. I use Binance because decentralized exchanges is not so, I believe, bringing UX, UI design as it should. Lending and borrowing, so it's the reason why you can earn money right now, usually in blockchain. It's usually because of lending and borrowing. And stable coins, so everyone likes stable coins because you can send money just in few minutes from one wallet to another wallet. What opportunities we can see in DeFi for startups? So market access. And when you're looking into DeFi, usually you should look on the global markets. So not to be specific in, let's say, Poland, Germany, Hong Kong, or any other niches. You are looking for the globe. But I suggest you to choose maybe 1 or 2 markets for the beginning, get this success story, get traction, and after that, look for other markets. So even in this case, try to target 1 or 2 markets at the beginning. Product flexibility. So basically, we can change our product really fast. I like it, and a lot of founders, after getting into Accelerator or any other programs, they usually quickly change their product to be more present to the market trends, because trends are changing so fast, especially in Web3. Revenue potentials. So right now, almost all startups, how they earn money in DeFi. So they are earning money through swaps, so fees. They're earning money by the staking rewards. Let's say I am Solana node validator. People staked Solana into my validator, and I earn money through validation of transactions on Solana. And of course, it's cost efficient. So right now, let's say if you want to send USDT in TON, it's almost free. So in Bybit exchange, you can send USDT to another TON address for free. So you will not spend any commission sending your USDT to other users. And what I like into centralized exchanges, that usually you can send money between users for free. So let's say if I want to send Bitcoin to you through Binance, it will be for free. But when you will use Bitcoin network, usually it will cost, I don't know, $10, $20, $30. Depends on gas fees exists right now on the market. Examples of success startup. I mentioned 3. Of course, right now it will be really hard for you to succeed in probably Uniswap niche or EO. But what is doing a lot of startups? They are building the same product, but on new blockchains. Let's say Scroll. They just listed on Binance like a week ago or 2 weeks ago. And if you know that Scroll just launched their new L2 blockchain, you can build DeFi swap aggregator on Scroll, and it's a chance that you can lead in the market. And Scroll Foundation can give you money to build a startup on their L2 network. In terms of role of DAOs, so as I mentioned, DAO right now sucks. And if you want to build a startup, think about how you can use this value of DAO and build something on it. Because DAO, it's a powerful tool. But due to monetization and raising funding through tokens, DAOs started to not bring as much as they could be. And usually it comes just to two main ideas. Governments, but it's poor governance, really poor. If you find all these votings, they are voting for something not specific, something that not bring a big value to the startup, and of course, funding. About key challenges, we already mentioned few during last day. So in different regions right now, we see regulatory laws. In Europe, it's MiCA. Right now in Dubai, it's WARA legislation. And I believe during next few years, a lot of new legislations will appear in different markets. And what is the challenge for DeFi? DeFi is not connected to any country. But right now you should understand all these laws, MiCA, WARA, and others, to build your startup. Or you cannot work with users from these regions. And it's too complicated. Right now, no one wants to have users from US in DeFi. But later on, I don't want users from European Union, I don't want users from USA, I don't want users from Canada. What users I can have? It's also a question that can appear in DeFi really soon. Security and liquidity. So security, we already know a lot of stories how DeFi protocols lost 100 million, 20 million, 30 million, 50 million, and it's problem. It's problem because smart contracts, they are not so great as they could be right now, and a lot of hackers, they can find way how to steal your money, how to steal money of different protocols. Liquidity management. When you're building your startup, usually you need to get liquidity, and it's complicated because bonds have really high rates, and to get investments almost everywhere, it's hard. It's hard to get investments right now. Hopefully the rate will cut slowly in US and money will be more easier to get into the startup, but right now it's a problem. I already mentioned few, so we have three main regions, US, no one wants to have users from US. Europe, we are still figuring out what MiCA is bringing to the table. Asia with different countries, so China is more close, Dubai right now it's opening a lot. Just recently they proposed that you don't have this VAT on transactions in crypto. So when you're sending money from one account to another account, before it was VAT, another VAT on top, but right now it's without VAT. So when you're starting a startup, usually you're looking for regions like Dubai because they have a lot of free zones, Saudi, probably Singapore, Hong Kong, some European countries like Estonia, Portugal, and countries like Cayman Island, BVA, and other jurisdictions that are friendly to crypto and DeFi startups. What trends I see and what can bring you additional, ideas, what you can build or suggest anyone to build. So it's DeFi 2.0. It's something new with more self-liquidity management. Cross-chain. So we right now saw a boom of L2s, and I know maybe right now it's 50 chains or more. So it's really complicated to move funding from one chain to another chain, and cross-chain it's an important topic to cover. How you can easily transfer money, let's say from Arbitrum to BNB chain, and then from BNB chain to Solana, and then from Solana to Atom. So it's quite complicated. Real world assets and tokenization, and of course AI and machine learning. So of course AI is much better adopted than blockchain, but what is the reason? Because AI, it's used by everyone. Yeah, blockchain, it's quite complicated to understand, and you cannot use into your day life. So blockchain should almost move to the way, do you know what language Meta is working on, or what languages are using to build some mechanism behind Amazon? You don't know. You're just using Amazon, you're just using Meta. The same should work with blockchain. You will use a product because you like the product, not because blockchain is behind it. Blockchain is just a technology that brings additional values to the startup. The same should appear with blockchain. AI is more adopted for customers. So one case study. It's a product we invested. It's a venture launch. So what is venture launch? Venture launch is a fundraising platform. So let's say if you want to raise some money, you can use venture launch to raise funding for your startup or startup of your friend. It combines DAO governance with milestone-based funding. Why milestone approach is important? Before, it was so easy to get funding. You could, raise 1 million just in a day. Right now, it's too complicated, and startup can get money and just disappear. They will not deliver the roadmap. They will not deliver what they should. So, milestone approach is bringing to the startups this idea that they will get, let's say, just $30,000 at the beginning. They should do something, agree that they achieved it, and then they will get second part of the funding. Then they achieve the second part of the roadmap, they can get second part of the funding, then it goes to the third round of the roadmap and third round of the funding. So milestone approach, it's a really important point in terms of this best relations between investors and startups. And startup will deliver what they should. Of course, early stage capital. So right now, it's quite complicated to get funding on early stage. Usually you can get funding through tier 1 venture funds, through angels, but if you don't know the industry, if you don't have enough connections, usually you will struggling with getting funding, and it's the reason why Venture Launch is building this early stage fundraising platform. So on your MVP or post MVP moment, you can get $100,000, $200,000, $300,000, $400,000 for your run-up period to get this traction and check if your idea actually can get a market fit. Few tools I suggest you to use on a daily basis if you are in DeFi. So first one is CoinMarketCap. Who uses CoinMarketCap? Please raise your hand. Okay. Any other platforms you are using similar to CoinMarketCap, and you can... CoinGecko, yeah. Yeah, we will come to it. Any other suggestion? Yeah, you can think about it. And so CoinMarketCap and CoinGecko, it's top two platforms to go through trends, all tokens, check what their market cap volume, and who knows the difference between market cap and fully diluted valuation, FDV. Okay, so please, always, it's important information. If you are on your phone and you want to work with DeFi, put your attention just for 10 seconds. Market cap is just valuation of this token for this moment. But usually when they launch a token, they launch just 10% of the token supply or 5%. So the valuation can be really nice. Oh, and you can compare, I should invest in this token all my money because the market cap is so low. But take a look into FDV. FDV, it's fully valuations that exist right now, and usually they unlock tokens step by step every month during next few years. And FDV can be 1 billion. So let's say market cap can be 50 million, but FDV is 1 billion. It means then during next 2 years, they will put on the market another 850 million of tokens. And usually those tokens will be sold. So actually your investments will suck if you are just looking on a market cap. You should look on a market cap and FDV. It's important metric to look into DeFi. DeFi Llama. So I mentioned a lot of chains. As we can see right now, Ethereum is still on the first place with a TVL 47 billion. And when you look into building your startup or working with some chains, you should check what is a TVL, because it's your market you are looking for. Let's say you want to build on a Scroll. Right now TVL is just 500 million and it's your market. So when you are building a startup on Scroll, so you should understand that you can get maximum up to 500 million. It's if all TVL, all funds that exist in this chain will go to your startup, but actually it's impossible. Usually it's maximum, it's 50% if you are a lending, borrowing aggregator. So check it, DeFi Llama, they have so many metrics. I'm using it on a daily basis. CryptoRank. So if you want to follow market trends, if you want to understand where tier 1 funds are investing, then you should go to CryptoRank. If you want to see what startups just raise money, you can go to CryptoRank and check what startups raise money, how much did they raise, what they're building, check their socials. So CryptoRank is another important tool for you to use on a daily basis in a crypto. So that's it from my side. I try to be as short as possible. I'm open to your questions. As I mentioned at the beginning, if you want funding, job, partnership, expertise, or any other topics to discuss, you can find my social. I'm open to help you. And yeah, that's it. Thank you.
Thank you very much. We have time for one question. One. Okay.
Thank you very much. It was an excellent presentation. First, kind of two questions. First one is, can you disclose how many, what your assets under management is currently in 3X Capital? Is something that you disclose now?
5 million.
All right, thank you. And can you give us some insights? You said that you're investing in seed and pre-seed rounds. So what is exactly that you see before you invest? You said you're investing in more than 50, if I heard correctly, projects. So what are you looking for in this stage of startup? And if you can give us some red flags, if you like. Thank you.
So I usually look on a startup that's already MVP built. For me, it's important to have a traction. We checked socials, so it's really easy to check. Do they have fake users on Twitter, Telegram, Discord? Then we are looking on the market, what is potential markets they can earn. I'm looking on the revenue model. So a lot of startups in Web3, they are thinking about building, but they are not thinking about getting money. So I want to see more business into Web3 than usual. And other stuff, I'm looking, it's what other partners they have, with whom they are working. Do they have any already built partnership, especially in ecosystems they are building on? It's important to have a team, so strong team, preferably with a full-time commitment. So at least core members, they should full-time commit to their product. I believe in startup and founders who try to bootstrap as much as possible and not getting funding, because as I mentioned at the beginning, when you sell your equity, you're selling your equity with low valuation comparing to the future. So it's main stuff I would point out. We have our own metrics, and if you want to dive more deep, you can speak with me. I will show you all metrics we are looking for.
Super, thank you very much. Now we are going to explore a topic that is really interesting, because many of you don't have Bitcoin, but you have a brain. So we're going to explore neuroscience and blockchain. A huge round of applause for Rebecca.
Hello everyone, my name is Rebecca Spoor, and I came all the way from Canada. Woo, give me a round of applause. Canada's amazing. Okay, so again, my name is Rebecca Spoor. It's just such an honor to be here and to meet all of you over this week. I've had a really great time and enjoy the culture here in Istanbul. And a little bit about me. I am from the capital of Canada. I grew up in cottage country. It's amazing. I went to the University of Guelph, the Faculty of Neuroscience there. And that was for my undergrad. And then I also studied at the University of Toronto with the Canadian Institute for Health Research Chair, who was my supervisor. And my research area was actually on an area called long-term potentiation in the mammalian hippocampus, which is just a big word for memory in the brain. And I then later got really interested in technology and how to actually store memories. And that is what led me to, well, it's a longer story than that, but the long story short is that now I'm really interested in legacy and how we can store our memories, and really, I'll get to that later on in the talk. But I've been in the blockchain and deep tech space since 2015. I've attended a lot of different conferences and traveled a lot, and I basically am a strategic advisor and leader. I don't have to go through my whole bio and what I'm on a couple boards and working groups, but just to give you some credibility, I'm not just talking about a bunch of random stuff today. I actually have a lot of research and a lot of people I know that are doing some really interesting stuff. So I've worked in Canada with the speaking at the Foundation Endowment Summit, the Crowdfunding and FinTech Association of Canada, and many other conferences. And I've been really blessed and grateful to have a lot of opportunities to travel and learn from others and grow as an individual and as an entrepreneur. So that's me in a nutshell. I have a question for you. What is value? How much do you think a thought, a dream, a feeling is worth? An individual thought, a group thought, and then a community's collective consciousness? Because these things all coexist and create something called the new sphere, which is a philosophical point I'm going to get to a little bit later. But just to have a think about what that really means, because our thoughts, our dreams, our feelings, and our communities shape our reality, and that shapes history. So what is my vision? Financial freedom for all stakeholders that participate in research that I'm collaborating on. I think it's so important for research contributions to be rewarded in some fair, equitable manner. And I'm really, really passionate about digitizing the scientific process, monetizing data across the value chain, and respecting, ethics and rights of all participants. And then, of course, grassroots participation on all of these things. Who has heard of the term decentralized science? I feel like this is a really smart room. Put up your hand. 1, 2, 3, 4, 5. Okay. So let's start with some of the history of decentralized science. In a digital asset kind of economic system, there's a lot of different things we can look at. We can look at the structural finance and the game theory, which is one of my favorites. We can look at the philosophy, the law, the ethics, which has been touched upon a lot today and this conference. We can talk about the psychology and the actual decision science that goes into designing a system. We can talk about the computer science, the cryptography, the AI optimization and the control theory, or even the systems engineering at the level of the computer. So there's all these kind of intersecting thoughts that create kind of these economic systems that we're in the process of building as a society. And I don't want to confuse you all, but basically decentralized science, whether it be studying computers or healthcare or any real area of science, it's really being used on the blockchain now. It started back in 2014. If you think back to how a lot of academic funding works, you have to fill out a bunch of forms, you have to submit all your peer-reviewed stuff, you have to get a lot of approvals, and it's not shared automatically as much as it could be. This was back in the day. Now we're enhancing the structures of funding, going to researchers and scientists, especially in different niche areas. We have more data being pooled, more cross collaboration between academic institutions. We have research tokens, funds being sent from underrepresented countries into ecosystems for enhancing collaboration and upward mobility. We have just more real-world applications with something called decentralized filing, which is just filing on the internet. So there's a few different projects. I don't know if you've heard of, who's heard of Filecoin? Okay, so some people have heard of Filecoin. There's IPFS. It's really about intellectual property being stored in a network that everybody can get access to, but each node in the network is a computer that connects to a protocol on the internet. So that's the kind of simple way to explain it. And then even a couple years back, some larger corporates started getting into the space. I don't know, I'm not going to name which ones, but they've put in several $1 million to the DAO structures, and that's actually focusing on some healthcare initiatives that I think could be very promising for the communities. So it's a lot of interests. Okay, so how do we align interests? Because that's something that I think is the most important thing when you're trying to achieve a mission and a vision. You need to be able to all work together and collaborate, but sometimes that's very difficult. But the promise of the global brain really brings that hope to us. And what is the global brain? So it's defined as a neuroscience-inspired and futuristic vision of the planetary information and communications technology network that interconnects all humans and their technological artifacts. Basically, the three values are the World Wide Web and the synergistic emergence of this collective consciousness known as the noosphere. The second value is social networks online, and a lot of information is being propagated person to person because we each have, as I said, our own mental models, and then we have our social media networks, and then we have our in real life networks, and then we have our bigger municipalities, our communities, and then we have our countries, and then we have all these different networks that create kind of this propagation of information. But really, when it can be stored and tracked and traced and placed in a digital environment, it actually can enhance how we collaborate. So that's really what Value 2 is about. Value 3 is about the global distribution of instant kind of online. Think about posting to a social media network. You know, there's algorithms that create a collectively intelligent network now that when you look at artificial intelligence and some of these technologies around media networks, Cole's notes of what this platform does. It's in the MVP stage, but the magic of what it's doing is commercial orchestration, and there's infrastructure as a service. So we've got the people, the process, and the platform. we're in with the Chainlink build program, and there's a patent being commercialized. And the real opportunity, though, is with intellectual property around sciences. I'll tie this all together and make sure it all kind of comes home. Is monetizing and sharing that intellectual property in a shared network is going to help to speed up innovation and speed up commercialization and speed up getting ideas to practical application. And anyway, this particular project I'm advising is they have some patents granted, but I'm trying to convince them to open source everything, and then we want to get more community members involved and build out what we're doing. Basically, it will enable economic networks to define their composition and governance across blockchains, oracles, public registries, private data, marketplace providers, and crowd systems. And let me show you this a little bit more in depth. I don't want to go too technical because this is more of a developer, product manager conversation, but has anyone heard of the Zoku's trilemma in blockchains? Okay, this is something that it's a triangle of, okay, so of a few things. There's the scalability, privacy, and security being the three main things that you really need in a proper system for blockchain. And the Zoku's trilemma is like you can only have a couple, you can't have all three. It's really difficult to have privacy and still have, scalability. It's really, it's important to have as much of the three as possible, but very challenging. What we're working on is solving that, and let me try to go through this because the main opportunity here is we're going to be digitizing special purpose vehicles, and that will speed up the funding moving into the mandate that we're going to have. So the instruction, okay, so basically there's a link staking wallet. Who's familiar with a link staking wallet? Okay, so there's a wallet, there's going to be pool and reward management protocols, and then there's 13 layers of cyber defense. I don't want to get into that because that's the secret sauce, and but there's going to be an opportunity to have 13 levels of baseline infrastructure defenses, so you can do the staking, kind of network sheriffs, network whistleblowers, secure communications, immutable governance, meta contracts, language, audited protocols, and then there's a tokenization as a service protocol. But the real opportunity here is that Chainlink we're in with the build program, so they're already working with 10 banks, and I can't say too much about what's going on here, but I'd love to collaborate with more people on that one and increase the total value locked and forge some partnerships. So just keep me posted on what you found interesting from that. Now, some real-world examples of decentralized filing and data management. Ocean Protocol is a project that started in Singapore, and it's a data exchange protocol that allows data to be shared and sold securely. It enables data owners to manage their data while maintaining control over their assets. And, really, if you have valuable data sets that were previously siloed, this is a way to allow for that collaboration and increase the, collaboration between institutions and stakeholders. It's a neat project. Another one that's really neat, I'm not saying I fully endorse these, but I think I found them neat. That's a personal opinion. That's not the opinion of any of my firms that I work with. That's this is a personal disclaimer. But Cerebrum DAO is another one that's kind of interesting. They're trying to overcome the traditional barriers in neuroscience, such as limited funding and fragmented data sources, and collaborate towards scientific progress in Alzheimer's research. So this is just a big think. I love big thinks. I love kind of the 50,000 square foot, I'm jumping out of an airplane, I'll throw on my parachute and figure it out as I go conversations. But with these systems that are learning games, because if we build these systems that take all the water, take all the environmental assets, and completely devastate us, I don't want to get into that too much, it's a little bit doomsday, but I used to work in, I used to analyze things from almost an actuarial perspective, and like, we just want to be safe and have a good day. And what I think is really, really interesting is like, look at, for example, Elon Musk. Who is familiar with Neuralink? Who thinks it's weird? Put up your hand. Who thinks it's kind of cool? Who thinks it could help people that are paralyzed or have a traumatic brain injury, for example? Who thinks it could help? Okay, great. That's some great feedback. Lots of hands up. Imagine we can get machines helping us to be, do, and have our ultimate self. There's an area, like, we're going to be living in these hyper-connected homes. There's going to be so much data coming at our brains. There's going to be so much data going into the systems. We're going to have to adapt and evolve to live in our environments. That's the future that I see. I'm a futurist, and I really see, like, you know, I want to have an optimized environment. I want to have like the best sound system that knows, oh, you need to have a tea, and it'll put on some like yoga music, and I've had a better day. Like, you know, it's a bit of an ask, but I want my computer to know, for example, when I'm in the middle of a trade or something, if it stresses that if it senses that I have anxiety about a trade, maybe my market sentiment, it could affect the trade, if it's a big enough trade, if it's an institutional trade. Like, there's all these things that could be built into a human-machine augmented system. So I'm going to introduce very quickly an idea. Who's heard of psycho-cybernetics? Okay, very futuristic. Okay, a handful of people. I'm still just reading about it, still just learning about it, but really it's about augmenting human intelligence. And this picture didn't turn out too clear, that's okay. It's basically control theory, information theory, data analysis and decision making, operations research, optimization, artificial intelligence, general systems theory and systems analysis. And if we can put that all into a beautiful model, you know, we're going to have like desired enhancements, even cyber enhancements that'll help our efficiencies, and efficiency gains increase productivity. Productivity increases GDP. That increases, you know, exponential happiness potentially if we have healthier, optimized selves, right? I'm not saying this is for everyone, it's just an idea. But with these transitions to technology that enhances and maybe increases our lifespan, there's going to be major evolutions and major connectivity. And I just vote for automating the boring stuff in life and making life easier through systems that automate various things in our life, and especially around healthcare. You know, if you have digestive problems, there's technology for that. If you have has anyone heard of bionic limbs? So you have an injury and you're able to walk again. Like, these are miracles that are possible in our lifetime. So that's what I'm really passionate about, and this is all kind of neuroscience. And if we have the right financial incentives to grow networks that are focused around building communities that sustain kind of the development of these technologies and various, for humanitarian reasons, for healthcare reasons. Anyway, how do we lead the governance of these technologies? Because there are ethical considerations as well, right? We need to have an empowering, empathic environment. It's complex, a lot of conversations, but community involvement in the planning. We can't just have doctors and PhDs and politicians and everybody controlling everything. Bioethicists are great, but we also want to have lived experience patients that are saying, you know, want to see this feature in the design, right? I want to see this in my life to make my day better, you know? So, and then how do we fund realistic projects? How do we ensure consistency and trust among all stakeholders? User experience design. The principle that I want to just really bring home, number one, is there's 9 principles. Number one, least effort. We all like to be lazy once in a blue moon. Whatever is the simplest thing to do, let's do that. The principle of perpetual habit, you know, atomic habits, you become who you really are based on your habits. But if it doesn't require a lot of effort and your energy optimized, that makes sense. The principle of socialization. Nothing is done alone. It requires community. The principle of emotional contagion. If we're passionate and we're happy and we feel inspired, we're more likely to take action. It's just common sense, right? The principle of identity. So what do we agree on in these areas of neuroscience? Because if someone's going to get a digital version of my brain, or say, for example, all my data, you know, I want controls over that. It's my privacy, right? The principle of beauty. You know, if someone's getting access to elements of my memory, or which could just be a representation of a photo of, like, you guys saw a photo of my father. I barely know any of you, but like, I'm trusting that, you know, that builds a little bit of trust. You get to know my story. And then, you know, the psychology of mistakes. We all want to build products that we can iterate on, right? Because maybe we haven't tested things enough with the right users. We haven't tested things enough with the right cohort. It's really key that we have focus, attention, and concentration. So again, it's about data sovereignty. I'm making a joke here, but I want to own my brain. And just to wrap up here, you know, like there's a lot of rules around data sovereignty. It's been talked about a lot today, but when there's sensitive data, especially around, it's important to have human rights at the forefront and anonymize and de-identify certain things, definitions of harm defined, and then really paying users fairly for contributing. In Canada, we have AIDA and Bill C-27 under discussion. There's a lot I could discuss on those, but just because I'm not in Canada right now, I'm not going to go into that. But I think there's a lot of leadership, and it all is going to come together at the right time. There's a group called CIFAR in Canada, CIFAR, and they're doing a lot of really interesting research too around this. And yeah, it's really about having the complete life cycle of experience design in your product cycle, user research being number one, user experience, interaction, visual, and interface development. And if we have human-machine systems being developed, you know, even, for example, a live trading simulation. I know I got pitched something recently at the firm I work at, and there was a guy that wanted to do virtual reality trading. I won't get into the secret sauce of his business, but can you imagine, like, the brain load, the cognitive load, the exhaustion from having to monitor, like, different sectors, different asset classes, different geographies as one person, and instead he could have all the visualizations in a virtual reality, and he could, almost like when you put on the 3D goggles and you can see kind of the charts and like interact with it. It's like almost like that movie with Tom Cruise. Anyway, marketing requirements documents, research validation, product requirements documents, a whole bunch of life cycle components that are very, very important. But this can all be digitized. And someone today already talked a lot about digital ID and working groups. At the end of the day, if we are going to digitize all of these things, the most important thing is that we are protecting patients. We're giving them kind of the control, in my opinion. I think there's well-intentioned doctors and pharma companies and financial backers that are good people. I mean, but they're in business, and they all need the same shared data. But we need to have the identity, in the right system. So I actually have seen some patents that are really interesting that could help make this a little bit easier for people, but I can't say too much there. Okay, big think. Can we be immortal with digital twins? Who knows what a digital twin is? Put up your hand. Okay. So, who wants to live forever? Do you really want to live forever? No, it's a good song, right? I think the beauty is technology. We need to build systems that we can store our memories, our moments, and our history as we build it. And it has to last 1,000 years. I want my grandkids to be able to be like, oh, that was my great-great-grandmother. And to be able to go back into a system and find, the picture of me in Istanbul giving a talk. Just knowing there's this history that can go into all these technologies, and there are some ways that we can really have neuroscience and psychology be really part in that design. So it has to be functional, reliable, usable, and pleasurable, because if it's too many buttons, if it's too technical, if it's too complicated, it won't be something we'll use. We'll think this is too complicated. It's simple. Like, you know how you just say, I want to restart the computer, I'm going to hit the button, turn it off, blue screen of death. Who's ever done that? Who's ever had the blue screen of death on your laptop? And what do you want? Do you call the IT person? I am an IT person, but there's so much. I could talk about databases. I could talk about open source technology. I could talk about the future, but really it has to be a happy experience with any of these systems we're designing. And I guess that's the take home from my talk today is I think we need to do decentralized science. That's my opinion, but we need to vote. And the missing piece is it has to be easy to use. For all of these systems, if we're designing financial products, if we're designing philanthropy mechanisms to, incentivize all these stakeholders to collaborate for, getting more research funding, moving to academia and to developers, it has to be easy and reliable and functional. But really the missing piece is it has to be pleasurable and happy and incentivized and gamified. So that's how we're going to self-actualize and hit our goals. Thank you so much for having me today, guys. If you want to stay in touch, here's my details. And back down to earth now, not space. Thanks.
Thank you very much. Do we have one question? Everyone is so. Oh, we have one.
Hello, Rebecca. I'm Thomas, and I am from Greece. Thank you for the wonderful presentation. For some reason, I believe you're familiar with quantum computing. So I would like to ask you, do you believe quantum computing is a threat for blockchain and decentralized technologies? And if not, do you believe that quantum computing can help towards finding treatment, medical treatment, neuroscience treatment in the future?
That's a really great question. So with quantum systems, it really, from my understanding, is really about vector analysis, and it's also about kind of the uncertainty principles, right? Like Heisenberg, and I wouldn't call myself an expert in quantum, but I think it is about the observer bias on anything, and it depends on the inputs that go into these systems and the training models that go into these systems, and if they're combining data sets and training models and different even developer biases, like there's a lot to unpack there. So my quick answer is, imagine everything everywhere all at once. Like we can't really, there's infinite possibilities and probabilities, and we as human beings don't have that kind of, until we figure out an area of the brain called the, like at the inside the neuron in the brain, there's a thing called the microtubule, which is apparently the origin of consciousness. This is a very derailed conversation, but once we figure that out, we can understand that maybe possibly the singularity, and we can understand, this is my speculation, but you know, basic, and I know a lot of professors that are working on AGI and things like that, and they're way smarter than I am. But imagine we have this capacity to understand the origin of consciousness. If there's the observer bias, there's the double split experiment, like there's all these things that just pop in my mind right now, and this is a very long-winded response, but quantum computers will have vector analysis capabilities, and that's something that the human brain is not as fast at computing that. But if we have a machine that calculates like 40,000 brains at once, you know, the mind in the cloud, or a mind of minds in the cloud, that's a really interesting science fiction movie. That's my answer. Yeah.
Thank you very much.
Thank you.
So now we are moving from the brain to open networks. I want a huge round of applause for Joseph Sebastian.
Thank you. Thanks.
I don't know if that will work. I think you should, yeah.
Can you use these with Canva?
Sure.
It's working also.
Got it.
Thank you.
Hi, everyone. I'm well aware that I'm the session standing between lunch and all of you, so I'll try to make this as quickly as possible. Let me give you a quick introduction. I'm Joseph. I'm a venture capitalist based in India. I invest primarily in fintech, in early seed to Series A companies, typically $2.5 million. I'm part of Bloom Ventures, which is a $600 million AUM fund based in India. Right? Today, though, I'm going to be talking about a very different topic. Talking about open networks that are beyond blockchain. In some ways, most of my career is spent in traditional finance, so I'm sort of the odd one out today in this audience. And so I thought it would be good to start with a different topic. So, look, today is actually quite an interesting day. Today is Halloween. Anyone here sort of celebrating Halloween? Happy Halloween to you guys. Today is also Diwali. Anyone celebrating Diwali? Happy Diwali to you. Today is also my birthday, so I'm excited. So I'm excited to spend it with you, with all of you, by talking about the story of India over the last few years. How many of you have been to India? Can you? Yeah, that's not bad. That's a decent number of people. How many of you have made a digital transaction in India in the last few years? Right? Okay, so this is the story of that digital transaction, what went behind building that. Right? And those of you who are not very familiar to India, India is the largest country in the world in terms of population, but we are like 141st of 187 countries when it comes to per capita income. We are 143rd on most health metrics. 163rd in ease of doing business. So we're still not on the top, right? And in 2008, India had one of the largest unbanked populations in the world, right? With less than 20% banking penetration, 1 billion people remain unbanked. So today, earlier, we heard about the population of Istanbul. That's 20 million people. So this is significant. It's 50 times that remained unbanked. And a majority of them were women. Fast forward, in 9 years, a lot has changed, right? According to the Bank of International Settlements, India did for financial inclusion in the last decade what in a normal course of things, looking at other countries' trajectories and other history, would have taken 5 decades, right? And banking penetration has gone up to 80% using digital ID and closing the gender gap that also, that just came with the fact that banking penetration was so low. So in some ways, India leapfrogged what was the traditional trajectory when it came to financial inclusion. How do we do it, right? One of the most important components is mobile phone penetration. Tele density also moved up from 37% to 93%, and India has 700 million unique subscribers, and we have the lowest cost of data in any country anywhere in the world. It's in India. All of this was not a coincidence, right? This happened because of a range of factors coming together, and in India, we call that the JAM Trinity, Jan Dhan, Aadhaar, and mobile. All of this is different because Aadhaar is a national identification number, which is a digital public infrastructure that provided the identity layer, the basis on which a lot of this could be built. Because Aadhaar was able to scale up to 1.2 billion people, we were able to sort of provide mobile phone connections in a very different way. A new mobile provider in India came in called Jio, which built all the sort of capex of a traditional telecom operator, but scaled up to 100 million users in less than a year. And was able to do that because all the KYC for your mobile connection happened instantly because of using the digital identity program that we had, which is Aadhaar, and that allowed for a lower cost base on which they could operate, right? And they were able to scale up much faster. On the back of these two things, once you have got identity, once you've got a mobile phone number, the government pushed that everyone should go and open a bank account. And the government sort of created incentives for it. And with these two enabling layers already there, opening a bank account was significantly easy because KYC was available, as well as mobile phone penetration was now solved, right? This whole approach is actually quite different and novel. Because if you think of the traditional sort of Western world, there's an all-private approach, right? That we've got apps and platforms. Think of Visa, think of MasterCard, think of Android, which are owned by the private sector that then pushes a lot of these products to the public, and we all use it, and it's valuable. But that's sort of gated by the ability to pay criteria, the ability to sort of, make profits of the customer pool, right? So that's one way. The other is, we have seen the government-led models when it comes to financial inclusion. A lot of countries have government-owned banks. These have their own problems, right? When it comes to efficiency, when it comes to sort of incentives to be able to build for, or sort of scale to the levels that we have seen. This is where a third and different approaches come in, right? This is decentralization in a different way. These are open networks, right? These are open sort of, this is an open paradigm. In India, we call them digital public goods. Globally, the conversations now is moved to digital public infrastructure, where essentially the government sets up the protocol on which private actors can come and innovate on top of it. So Aadhaar is actually set up by the government, but any private entity can use it for KYC, right? Similarly, the most exciting thing that's happened in India is UPI. Has anyone used UPI or heard of UPI? Yeah, you've used UPI. You've used UPI? That's okay, you've heard of UPI. And so UPI is the Unified Payments Interface. The combination of having bank accounts, the combination of having identity, and then the combination of having mobile led to the next big orbit shift in India, which was which was in payments. And this was enabled by the fact that there was open tech standards and building blocks, which is the infrastructure that gets built. On top of that, there's a governance layer that the protocol sort of engages on. And lastly, the market comes in, public and private companies come and innovate on top of it, right? So in 2016, India mostly used cash. We had about 5 million point of sale machines. And there was like less than 7% penetration for debit cards, right? Fast forward to today, India is now the largest digital payments market in the world. We do $100 trillion, $1 trillion of annual transactions, and just that curve, right, starting in 2016 to 2022, is the kind of exponential curve every venture capitalist wants to see in their company's revenues. But we have seen something like this in our sort of macroeconomic sort of critical components in our macroeconomy. And this is sort of a different paradigm, because what the government essentially does is this is basically set up how the different entities within the framework, within the financial system sort of engage with each other using this unified payment interface, right? So the unified payment interface at the base have a user can come in and onboard on an app, and there are lots of apps. There's Google Pay, which is owned by Google. There's Paytm, PhonePe. These are all sort of fintech apps where you go and onboard. In the back, what is actually happening is that there is a protocol has been established through which banks can talk to each other, right? You are just seeing the top of it through a interface that are run by public, any sort of fintech app. But in the back, the heavy lifting has happened because of this digital public good, where there is a sort of an establishment of a protocol is there between how two banks can talk about a transaction, right? Very simply. So in other parts of the world, that particular piece is owned by a network like a Visa or a Master. In India, that's a digital public good, because of which it costs zero, right? There's no cost on it. You guys all know how much Master and Visa charge for sort of interchange fees. None of that exists in India, right? So that's a huge sort of advantage to the system. Now, it's not just in India. Similar products are now being emulated in other parts of the world. The big important one is probably Pix in Brazil. That's already sort of now scaling to about 140 million users. And 50% of those had not used digital payments the year before Pix was introduced, right? So this is really democratizing finance in a big way, and it's using an open approach. So the open approach has the significant advantage that it's just more scalable. Once all of these were now established, identity, mobile phone penetration, payments, now we're moving towards a new set of digital public goods. One of the most interesting ones is it's called DigiLocker, where all of your critical documents, it could be your driving license, it could be your graduation certificate, it could be all of that, gets verified and stored in an online platform that can then be accepted by any government authority. So what a traditional notary or a trust layer would have to do, which is to verify that your document is true, that is now happening digitally and available for all of its citizens, right? So that increases a lot of efficiency in the economy. Right, and there are sort of three layers right now in the stack. I mentioned first is identity layer, second below that is a payments layer, and lastly there's a data layer. And this data layer comes in many forms. One, talked about, DigiLocker, which is sort of documentation, but there's also more exciting things. For example, there is now something called an account aggregator that India is sort of building, which is another digital public good. And how account aggregator essentially works is it allows for a user to give a bank the permission to pull all of their account information from the different sort of financial institutions who might have your information. So today, if you're a small farmer or you're a small sort of shop owner and you want to ask for a loan, earlier you would have had to print out sort of lots of information or give your tax filing, give your sort of information about your transactions. But by sort of just putting in your credentials and accepting a one-time OTP that comes on your phone, the bank is now able to collect all of that information in real time and instantly, right? So the data layer sort of extends from documentation to even financial information that could be valuable. And we are now sort of building digital public goods for a wide range of use cases. I mentioned about two earlier, DigiLocker. The last investment I did as a venture capitalist is in a company that's building an Uber and Ola competitor based on a protocol called ONDC. The company is called Nammayatra. It operates in Bangalore. And what they do is that, any app that wants to build on this platform can enable your cab drivers to show that they are in this particular area, and any application can sort of take that data and offer cab rides, right? So Uber and Ola is walled, Lyft in this geography and sort of in the West is walled for just there on both sides of the platform. The people need to have their app, but this is sort of opening that up. And you can sort of, that information can flow across any application. So tomorrow, if you're an airline, like an Expedia, can integrate with an ONDC in India. And when you book your flight ticket, it can also book your pickup from your home and your drop off to your destination in one transaction, right? That's an example of what we'd be able to do. So a lot of these things, I won't sort of spend a lot of time on it, right? And we've got, from toll payments to DigiLocker that I talked about, to health data and the vaccination that happened, it's all built on these digital public infrastructure layers in India. Right. So why am I bringing this up here, right? So as I mentioned, there was a government approach, there was a private approach, and then after that there was also a decentralized approach, which a lot of you are interested in, right? So, and in the decentralized approach, there is no regulation because there's no way a regulator can sort of have access to the data. That also means there's been challenges with acceptance, right? Today, the same architects of the digital public infrastructure movement in India, who's a gentleman named Nandan Nilekani, who used to run Infosys, which is one of India's largest companies, is now focused on how to take the same benefits that tokenization can bring, but take it into a realm of the regulated entities, right? And that approach is called the FinTech. The FinTech is very new. It's essentially taking the learnings that India has had in terms of digital public infrastructure and applying it to the financial world in a global landscape, right? That is what it is, and a lot of the inspiration in terms of the technology and in terms of sort of some of the use cases comes from the decentralized world, and the idea is how do you sort of take this to regulated entities, right? Now, I've sort of, this is very new, so I've fully borrowed some of Mr. Nilekani's slides, right? So essentially, FinTech is a network of networks. So if Pix is there in Brazil, UPI is there in India, how do you get them to work with each other, right? So FinTech, the idea of the FinTech was sort of started with a white paper that Mr. Nilekani has written with the Bank of International Settlements, BIS, and they're now sort of starting to build on this. This is really interesting because traditionally finance has been built with sort of purpose-driven workflows, right? The P2P payments that in most countries are there are very different from the rails on which government to people payments had to happen or people to merchant payments happen. Right? These are all sort of different layers. In the US, you might use PayPal for merchant payments, but you will use, a bank for government payments, and then you will use something else for P2P payments, right? It's all been different rails. The idea is, can you sort of unify it, given they're siloed, slow, and expensive, to a set of rails that can have different sort of programmability and different kinds of functions, and in some ways, this is the high-level architecture, but the basic idea is that the same sort of benefit of tokenization, where can you take maybe a deposit and tokenize it at the point of the regulated entity, or like your bank, and then trade it on the Finternet protocol, right? That's the idea here. So it could be your receivables, it could be sort of invoice payments, it could be all kinds of things. It could be your mutual fund investments. The tokenization at the point of a regulated entity, and if that tokenization happens at a point of regulated entity, then can you trade freely using the protocol that's being set out by the Finternet architecture. That's broadly what that we are sort of trying to build here, which is to take the best of what we learned in the DPI world and apply it into this new world, right? Now, this is, there's a lot that's available online on this. I'd encourage you, all of you who are sort of building in the sort of blockchain space and trying to think through, hey, how do you take some of one of the big challenges that's been faced by the decentralized world is the fact that you're not able to get acceptance beyond a certain limit because a lot of entities require regulatory scrutiny, or a lot of consumer confidence requires regulatory scrutiny, and therefore can you take some of your learning, some of your abilities in the sort of DeFi world and sort of adapt to the new reality that's starting to emerge, that there's got to be maybe a middle path, right, between what was traditional finance as well as now what we see as decentralized finance. It can be sort of bring these two together in an interesting way. With that, I managed to finish this in 22 minutes. Right? So you can read more about Finternet on that QR code. So you'll be able to sort of get more information there. My LinkedIn is available with this QR code. And the high level sort of takeaway that I wanted to leave most of you with was the ideas that's been sort of piloted in India and scaled in India in terms of the digital public infrastructure has much wider resonance across the sort of the financial world, and we might see a new approach that combines some of the best aspects of decentralized finance into this new paradigm. So I'd encourage all of you to sort of get an early seat in this new rocket ship and get on board. Thanks.
Thank you very much. Do we have one question before lunch? We have one question.
Joseph, thanks so much for the wonderful presentation. I'll be quick. Where do you see the biggest promise as a VC in terms of the business opportunity for ventures? So is it Finternet? If not, like what would come next afterwards? Thanks so much.
No, I think I tend to think of it less from a technology standpoint and more from a distribution standpoint, right? So as a company, what is your edge in terms of being able to create distribution, right? Is your edge as a company being able to create distribution, let's say, a founder based in, London with connections to Philippines? Can you create that sort of, can you create a remittance company in that corridor because you've got an edge on distribution? A lot of what I think, at least my learning in venture over the last few years, is that distribution eats product for breakfast, right? It's, at the end of the day, it's your ability to create distribution that's most critical. Product is a component for it, but it's not the most critical thing, right? So I'm always more looking at sort of how scalable architecture like this can be taken by people who've got a distribution mindset and sort of scale, right? That's really what I'm excited about when I look at investments.
Thank you very much. Now I want to pay attention to your distribution and distribute yourself to lunch, and see you here in 1 hour, okay?
everyone. Where is everybody? What is this? Sit there or here?
They're still eating. So I have like 100 questions, but we will start with the simple ones. Can you explain to people here what AML practice is and how we address risks under the AML and the AML blockchain challenges and stuff like that?
Okay.
But let's start with AML. It's an after-lunch discussion about AML.
Okay, so AML, what does it mean? Anti-money laundering. In centralized systems, as also in decentralized systems, it's essential in order to protect the system.
Give me just 1 second to close the music because we have...
I like it actually.
I can even... I have ADHD and it's distracting me, so sorry.
So yes, centralized systems and decentralized systems have to implement anti-money laundering protocols to prevent financial crime. And this is to protect both consumers but also the platforms itself, the institutions. As a financial crime investigator, this has been my main focus and my main mission in preventing financial crime on all platforms that I've been cooperating with. Besides anti-money laundering, there's also KYC concerns, onboarding of customers, fraud prevention, any sort of illicit activity. In relation to blockchain, that would be darknet wallets, so looking on chain where the wallets of the customer of a particular platform is related to wallets that connect to darknet market or to illicit actors, which would be websites that provide illicit services, or also...
Can you define illicit?
Illicit means forbidden. It means that a website would encourage buyers to buy illicit substances, such as even like, of course, drug, but also pharmaceutical drugs that are forbidden in particular jurisdictions. And what else? So I guess this sums up what anti-money laundering is.
Super.
There's so many techniques for anti-money laundering, particularly on-chain, that criminals just have to, because of the immutability of blockchain, criminals have to come up with more sophisticated techniques in order to launder and obfuscate their funds and their source of funds. And so it's just such a broad topic and exciting, in my opinion.
So, how many of you already been exposed to some kind of coin? You bought something like an NFT or a meme coin or a
scam,
Bitcoin, or even a scam or a rug pull, whatever. Can I see hands? How many of you tried? Okay.
Fraud, SMS, receiving various impersonating persons that, from the bank or from the government. We are those people and we would like to ask you to provide this information, otherwise you lose access to your account, etc. So all these sort of crimes is financial crime prevention in my area, in blockchain. And it just keeps getting sophisticated, more and more sophisticated, because as long as there's money
involved,
the crime will just continue.
So, of course, we have bad actors, but we have also good actors. Okay, out there are a lot of companies that they are trying to innovate, they are trying to create something using blockchain technologies or build on top of new technologies. One thing that I get every time someone comes with an idea or a startup or any type of
coin.
The good thing is that I don't get, because I act as a consultant, I don't get such many coins, because most of the coin space, they are either a type of scam, so they will say that I will create a kebab coin and I will rule the world or whatever, and people buy. But there are cases that there are legit business out there. They have some kind of actual business, and they think that if they decentralized something, they will create value. So, for example, one of our clients has a company that's fostering trees. And he says, okay, I foster trees. A lot of companies pay me as a CSR to grow the trees, and they have some kind of carbon credits in return. So this is a very legit business, growing trees, having a CSR of greening the planet and stuff like that. And the second thought is, can we do these carbon credits on blockchain in order to ensure that there is transparency and everything is legit? And of course we say, yes, we do. And we can do that in theory. But the problem is how a startup or someone starting on a blockchain can ensure compliance. And what are the baby steps to ensure compliance? You are in the beginning. You have a very great idea around blockchain. You have something that you want to do, not kebab coin, something solid. And in any case, something like an already legit business that is off-chain, that is out there, and you want to somehow use this technology. We said many times yesterday and today that blockchain is a general purpose technology, is like electricity. Okay, so how you use it and where you start in order to be compliant, because in many cases a lot of people with startups and a lot of people with having regular businesses, TradFi, traditional finance businesses, they have a feeling that, okay, it's easy, it's another technology.
For DeFi.
Yeah, but it's not another technology. It's a whole different world, and everything starts from compliance and find a good jurisdiction and understand.
Not for DeFi though, because as you know, DeFi has the restrictions on AML and KYC are not that strict as in, for example, centralized exchanges. And so it facilitates creating more businesses. My advice as a consultant would be to have in mind that you have to have a balance between adhering to compliance frameworks, and also it depends on the jurisdictions that you want to create your business. So have a good compliance team around you of also legal advisors that will let you know which are the most stringent compliance frameworks in that particular jurisdictions, and then if you want to expand in other jurisdictions, you can adjust to the regulatory frameworks to other jurisdictions, but start strong in order to raise credibility, in order to raise trust of the consumer. I would say that.
So the first step when you are starting and you are thinking of an idea, or someone has a business that wants to touch the blockchain part of the business, is to have to at least ask legal advice from someone and understand that this is a jurisdiction game and you need to find the correct jurisdiction to launch based not of the jurisdiction that has better taxes or a jurisdiction that all the financial laws, you can understand them and they can understand your business. So imagine that there are a lot of businesses right now that they are touching blockchain. They are traditional businesses, and when they hear that, okay, I need to go to Singapore as a jurisdiction, and they are from Europe, they say, I don't understand, I don't have a team, the effort or the money to actually create that kind of business is too much, so they stay out of the business.
And you know what? With DeFi platforms, The compliance frameworks will just, going forward, regarding the legal frameworks and the legal aspect of those businesses, I think that DeFi will have to implement more strict AML and KYC protocols in order to get this balance with adherence to compliance frameworks to raise the credibility of DeFi, but also find a middle ground and also not sacrifice the privacy matter of DeFi. So a middle ground, but definitely going forward, in order for DeFi to boost globally, it will have to establish more stringent AML protocols, starting slower with KYC, but definitely it has to become more...
At least KYC, KYB.
Yes, yes.
Yeah. So I'm going to a different topic now. DCN is working with a lot of, in the misinformation space, with a lot of reporters, with a lot of people, digital creators, around misinformation and disinformation. You have an extensive experience in blockchain forensics, and what are the best practices you think to combat misinformation in decentralized networks? Because everyone that has been in the space, in the blockchain, crypto space, have been exposed to some kind of misinformation, some kind of scam, some kind of failed hype that is based on false allegations, whatever. So, as a forensic professional, what they can learn and what we can do as actual startups, people that they are from the space, or just someone that is outside. I'm just someone that I don't understand, and I know what misinformation is. I don't know what forensic is, and I want to be protected. And
Okay, well, misinformation and forensics, which is prevention of financial crime, they are a bit different topics. But regarding misinformation, the validation of blockchain heavily depends on the accuracy of the data at entry points. And this could be enhanced with decentralized oracles for community-driven mechanisms where they validate and also provide and incentivize truth-telling regarding the accuracy of that data. So it needs a lot of validation, it needs a lot of research of accuracy, and like I said, incentivized truth-telling at the point of the entry of the data of the blockchain. Does this make sense?
I want an example.
So when the blockchain is created,
okay.
The entry of the data, it needs to be validated. So there's communities that provide further information and validation that these data are accurate. And the code itself is secure, is good. It doesn't it serves the purpose. So I guess from perspective of misinformation, I think this will help to get more data accuracy, and the code always needs to be validated consistently with thorough audits from perspective of misinformation. Now with forensics, I'm not sure. What would you like to know?
My question was twofold as regards combat misinformation and maintain also data accuracy in decentralized networks. So you already replied the half part about the oracles and that we need community-driven checks in order to understand and, of course, incentivize communities.
Yes, for truth-telling.
Yeah. And my mind goes to whistleblowers and other ways of, let's say, telling the truth and using blockchain as a validator technology to keep the identities hidden, provide some kind of security to the people telling the truth or whistleblowing, and also give the community transparency net to
Which is
act.
the essential value
Yes.
of the blockchain, yeah, the integrity of the blockchain.
Do we have any, and I'm asking it as an open question, any proactive steps that companies can take in order to uphold information integrity, something like what we can do on blockchain platforms to do that, like any proactive steps, like we have a digital ecosystem and we have some kind of misinformation or a hype or whatever, and
But we're not talking about crime, prevention of crime.
we are talking about both, because
Also scams, you mean?
yes,
Okay.
in many cases, imagine that scams is a form of misinformation that they are tied
Yes, yes,
in financial crime.
It
So
affects also the reputation of blockchain, it affects the reputation of the...
exactly, imagine that in most cases here we are all see some kind of false information of someone that says something that is not, in order to do something that ends up to a financial crime. And in many cases, people don't understand that by, for example, sharing a tweet about a scam, or sending a message to a friend that look at this meme coin is going to blow up and all that stuff, is aiding to a financial crime, because this is the case.
True.
And I was thinking to discuss about, let's say, all the proactive steps that we can do.
Yeah, let's do it. So you need to educate yourself, self-voluntarily. You just have to understand, like, where are you vulnerable? And if you feel that you are vulnerable in a moment, do some more research. If you feel that something is suspicious, a fish, yes, an SMS phishing attack, sorry, not fish attack, then...
if the fish is big, it can be an attack.
Yeah, depending on the fish. So yes, you have to do some self-research, some open source intelligence, which means that you go online and you Google stuff. This would be the first as individuals. Secondly, companies, businesses that offer this sort of services, decentralized platforms, or if you want to be an exchange or a wallet offering, you educate your customers, you create a newsletter, send it every week, regularly, inform your clients that these are the current, this is how our clients are currently being vulnerable by possibly receiving a sort of SMS or a sort of email phishing attack. But besides that, also just offer information, because I think clients in those kind of products, they are eager to learn more and understand more of this technology. And as also this technology evolves further and regulatory catches up to it, I think that governmental bodies also have to start creating, such as, let me say, Department of State of USA and DCN and World Learning. So the spread of information, give access to this innovative information to the people, create more events, involve people in more interactive sessions and dialogues, so just information, spread the information, be more open in having a dialogue on it. I think these are the most, let's say, active, proactive steps in order to combat misinformation. Because misinformation, what is it? It's something that you don't know of. And how do you stop not knowing it of? You inform yourself. You try to take, you try to have exposure to as much valid knowledge as possible. Yeah, and don't take investment advice from just anyone.
Exactly, don't take investment advice. I will pass the floor because we have 5 minutes. One thing that Vera said is, of course, critical thinking. Don't act on things that feels fancy and
and may I just add quickly, please also educate your family members, your grandparents, your parents, your cousins. Spread the word if you're truly passionate about this industry and you are really looking into having some impact, small or large.
No one's give away Bitcoin except George that said it and you didn't go to get it. One thing is about critical thinking. We did an experiment within a big company to send regularly, like once a month, fake phishing emails in order to see the click-through rate of the fake phishing emails. And in many cases, even in internal staff that they didn't, they know that they are
they're going to be exposed to it, nevertheless.
Imagine that they are fake. There is an internal newsletter, for example, that we created that say that if you click here first, you will get 5 days off in the next sweepstake of the company. The company never had a sweepstake. The logos were purposely wrong. All the pictures were questionable, yes, and 63% of the company clicked to get the extra days.
It's just like it happens mechanically.
Yeah, don't buy a not mechanical clicker, I don't know. But critical thinking and the thing to understand and read before you just click and validate information is the number one thing as regards the acceptance and the education of blockchain out there, and the bad sense that people try to say that, okay, what is blockchain? Oh, crypto. Or crypto Bitcoin or whatever. So everyone comes from a different perspective, and the people that know and understand even the basics, they need to share and
you know
to educate you.
When I worked at Kraken as an investigator, the Kraken was educating its staff on phishing attacks by sending, again, like fake emails with phishing links by a particular team which was called Blue or Red. Which one is it? I don't remember.
Red.
The red
it's
team.
always red.
It's always red. Okay, so the red team was creating those links in order to check how aware is the employee or how quick they are to react. And nevertheless, working in a crypto exchange with such high privacy protocols and policies, still, I think it was a percentage around 40%, people clicked just because, I guess, of the mechanical reaction or just because they are curious. So, yeah.
So I'm going to open the floor for 1 or 2 questions. I see, George, that...
You can, guys, ask anything related to financial crime, anti-money laundering, investigating on chain, so...
I have a lot of questions. Okay, I will skip the more complex one, but regarding financial crimes, later on your talk you mentioned about the spreading of misinformation, and what is it a crime of someone, a content creator or an influencer, for him to shield a project or to make a video or a tweet about a project that it's scam, or it's not, and maybe it will be in the future, or maybe it will conduct a financial crime later on? What is the content creator's responsibility, and how, being a content creator myself, how can I distance myself? What is the disclaimers do I have to do besides my own due diligence, but I'm exposed publicly? What should I do in order not to get to jail? Thank you.
Such a great question. So during the investigative process of scam websites, Ponzi scheme, etc., promising high returns, we need to verify how affiliated is the victim with or the subject, how affiliated is the subject with the source, with the perpetrators. So you would not be incriminated in case that you were not affiliated with that scam, because it could have happened just out of your awareness. However, again, you should be very, very careful what you promote and what you encourage others to take action on, because you need to do a deep research into how solid is that project, what is the main mission behind that project, what are the returns of that project for the respective clients that buys that product. You need to be careful, but to sum up, if you're affiliated with the scam and you are the one that truly promotes it, and it's like part of the team of the project, then yes, you could be incriminated.
I have a very, very simple advice. Don't share dumb shit that you don't know. So if you stick to that, everything will go perfect. One more question.
Ms. Rebecca.
I just have a question. You were talking about KYC. What are your thoughts on where the space is moving when it comes to like combining biometrics with wallet integrations? Because there's a lot of biometric multi-factor authentication, integrated wallets that are coming out, and that has some.
You mean in DeFi?
Pardon? No, like facial, like where you look at your phone, you're like, open up the phone, there's my face, and.
So you're asking how can we protect ourselves?
How? Yeah. What do you think about that? Because there's some people that have a lot of different opinions on it. Thank you.
I have one also. If you want me, I can start.
Yeah, but this is such a topic. It's so ambivalent.
As regards the biometrics and in terms of where we stand now, people want to remove friction. Why? Because if you remove friction, you do things easier, you showcase a really nice slide from the UX to the actual experience. So biometrics data is a way to remove friction, because it's easier if you see something and unlock if you think something and unlocks, and this is secure thing. We have three major technologies that will help. One is all the edge new chips. So we have all the new computers, they have an NPU, a neural processing unit, which is a separate unit for all the neural signals. So there will be some kind of space in order to have down in the edge on your computer and not in the cloud all your biometrics data, so nothing goes out of the actual access. The other thing is all these new technologies in terms of cryptography. We have AES 256 that is going really, really well, and we have some kind of fastest, let's say, handshakes between the protocols, and we can get some kind of biometric data handshake really, really fast. And the third part is, and we are going to speak in the next speaker, is the huge elephant in the room, which is AI. So if as a fellow futurist, you see convergence of AI with quantum computers, this will mean the end of cryptography, for example. But this is not the case from my perspective. I think that we need to use biometrical data, not to store it to train AI surveillance models, of course, within the actual user experience of people, and of course to make life easier. I think that I saw in your slides the best definition for cybernetics, automate things and make life easier. So biometrics and all these types of human-machine interfaces that uses our face or our voice or our thoughts, whatever, in the future, can help in order to remove the friction without compromising our security, they must be in the forefront of development, and we need to not to be also skeptical, not just say, okay, I will share my KYC with a device that I don't know, or I will do a face scan on whatever.
Rebecca, was this your question, or you were asking more in regards to privacy and how protected we are? Yeah.
How protected we are?
Yeah. Well, would you say, Dimitris, that we are more protected?
I have a comment on that. You can do it. Okay.
It's not 30 minutes?
It's not 30 minutes.
Just to sum up with Rebecca's questions, I think with the GDPR, European citizens are a bit more protected because GDPR requires data minimization and the right to be forgotten. But
yeah, but in Europe, we have also NIS and NIS2. Okay, in terms of legal framework, we are trying. But in terms of actual protections, no. Critical thinking, and you need to, your keys, your money, and all the other things that we say.
Yeah.
So as far as I know for GDPR, biometrics aren't actually included in that law. Yes. They are included in the... I thought there was a separate... Okay, that's good.
Wow.
But in the U.S., so we have WorldCoin, which is the Sam Altman company, which does a lot of the biometrics, which is a huge problem because it's just collecting all the data and then it can resell, which is a big problem because they have once they have your biometrics, they can pair it with the rest of the stuff with the rest of the information, and most of the blockchain companies are not actually correctly storing things, even when they say that they're GDPR or South African or CCPA compliant. They're not actually compliant. They're not they don't have them in separate databases, so they're matching them up, and then they can sell not just your information. But here's the problem with the biometric stuff is that it can give information about your health. So people can end up getting information about your health conditions from biometric information. And for us, it took case law from Apple to prevent privacy invasions because what was happening is biometric information opens your phone, like your face lock. So before Apple took on this case law, there was nothing that prevented people like the police from using the face of suspects, but if they were, maybe not conscious, right? So there's incentive to shoot a suspect and then use their face to unlock the phone, right? So Apple actually had to take this on and say you can't use an unconscious suspect, their biometric data like their thumbprint or their face in order to unlock a phone. So like you need the law to back you up so that your biometrics aren't actually used against you. So it's a really tough subject to
It is a tough
figure out.
subject, Alexandra. And I think just to sum it up, if you have doubts where you provide your data and your biometrics data, always check the platform's terms and conditions and AML, legal frameworks of that platform, because they will always have to state who are they regulated by, who do they have to adhere to, and this will provide you more information on how safe is your information and how safe is your money and how safe is are your investments.
I have a question. In crypto transactions, what are some of the biggest or most noticeable red flags or behavioral patterns that signal money laundering for you? Like, what is something that is noticeable straight away?
Love this question. Okay. Well, the first one would be a registered client in a given platform has just created their account. So they're a new client. They created the account, 1 week ago. And there's a sudden influx of funds coming in and coming out. So this is always a red flag that they're using the platform to obfuscate the the source of those funds. This would be a huge red flag that you can just immediately see it. The account has been created just recently. They put the money in fiat and then they extract it in, I don't know, it could be Bitcoin, but it could be also in Ethereum. It could be actually any type of cryptocurrency. But mostly I would say that criminals also use Bitcoin for money laundering. Yeah. What else? It could be, but if we're talking about money muling, which means that you pay people to create accounts in different platforms in order to launder the money, then it could be just an amount of 2,000. It could be just, but you have so many people laundering that amount. Yes, and then, for example, if they are registered in the US, but their citizenship is Colombian or Brazilian. Brazilian, not that common, but Colombian, definitely.
Yeah, I have a question on the GDPR compliance, since we were talking about it just now. I used to do a lot of research about if there is an existing tool that we can use and then put on a website or company to check if it's really GDPR compliant, because a lot of companies, of course, claim that to give confidence to users or to comply with the rules and regulation. Is there such a tool that we can find out if some of the, let's say, even the major websites are really GDPR compliant? And also the second question is blockchain storing data automatically GDPR compliant? What do you think?
Okay, so regarding to your first question, if it's a company that is based in Europe, you have to comply to GDPR.
The problem with the tool checking if this is GDPR compliant is that GDPR is not just a set of instructions that you need to, it's not a checkbox. Okay, the checkbox is the final step. You need to keep all these things in separate databases. You need to opt in, opt out. So we cannot physically audit a website if it's GDPR compliant or technically audit. We can check if stores data like cookies and stuff like that and violates if the terms of use are not in place and all that stuff.
TNC also, you can always check that in TNC. They have to mention that.
Don't have in mind the tool, because there is no tool to rule them all. But the concept is to have in mind like a checklist, and you can ask these kind of questions to the companies. The good thing about GDPR compliance is that it's mandatory, so they need to comply. So if you see something that is not what you think, you can just ask and take a screenshot before. But this is the case.
Yeah, but usually huge platforms and centralized exchanges, they always mention it in their TNC and AML standards that we operate for our European entity. We have these sort of regulations that we need to adhere to. So you can just check.
So we need to wrap up in order to move to our second keynote. I want a huge round of applause. And before we go that,
do I leave? Yeah, okay. Thank you so much, guys.
I want you to start singing happy birthday because we have a birthday. Can I call you? Come up, come up. Yeah, you can start. Happy birthday, happy birthday. You can go with the cake.
Thank you. Thanks, guys.
So, now I want you, with the same passion, to welcome Anna, that is going to speak about the big elephant in the room, AI with blockchain. And
thank you so much. Just find the presentation. Good. Hi again, my name is Anna Masishin. I am the director of the Institute of Innovative Governance. I also work with AI and technologies and AI ethics. I'm basically a lawyer. I got PhD in law, and I'm very passionate about technologies and the regulations, specifically AI and cybersecurity. So to start, I know that you are all tired, but well, I have a question for you. How many of you enjoy traveling? Like, basically, you're all here, you enjoy traveling, right? So imagine if AI, right, model decide that your weekend getaways made you risky in the terms of creditworthiness. Do you think it's fair? No. Right. So, how many of you love coffee? Mostly all of them. And have you ever tried to get a loan and felt like the algorithm like tracking your coffee habits? Right. So this sounds a bit extreme, and it's like the Black Mirror TV show. I think you watch it. How many of you watch the TV show? Yeah, that's good. So usually when the AI rating our credibility, worthiness, and tracking our habits. So why it is happening actually? So we welcome you to the world of artificial intelligence, but what is really AI, and is it really intelligent? Do you think you really know what is AI? I just want also to see hands. How many of you are aware of AI? Okay, good. How many of you know who is the father of AI? Okay, any thoughts? Who is like one of the pioneering of AI? Right, it's Alan Turing. He's as well known of his a machine that decrypted during World War II, German Enigma, right? So, and also he is very popular by Turing test. You can read more about that. But going to AI, so we have strong and weak AI. What do you think, those AI that we have, when you all use nowadays, what AI is it, strong or weak? Weak, right, because strong AI doesn't exist. Okay, it exists in the movies like Terminator, right, or some other movies, but it doesn't exist right now because it's a system that thinks like human beings. But weak AI, this is what we have now. This is like designed to limit human tasks. Oh, can you hear me? Yeah. So it doesn't understand how to think, and because AI doesn't have conscious, right? But understand how to work with the data that is being learned, that the system being learned. And we have AI, which is like a broadest term, and it's like to say like computer is smart. But also, I want you to understand the difference, not just AI, that's a general, because we all think, oh, AI, but it's actually the machine learning, right? The machine is learning from the data. So we have the machine learning, which is subset of AI focusing on data to teach computers. We have a deep learning, which is different, is a specialized part of the machine learning, and which is using the multi-layer neural networks like a human brains, right? Like we think that machine is learning from the data, which include complex and big tasks. For instance, and we have a generative AI, which is I'm going to tell you about more. But for instance, imagine you have a friend, a robot, right? A friend is learning, yes, machine learning, when you give him 2 pictures of a dog and a cat, and you say like, please distinguish, here's a dog and here's a cat, learn about it. The machine will be knowing, okay, here's a dog, here's a cat. Generative AI, what generative AI do you use in your life? Okay, ChatGPT, what else? Midjourney, right? Wow, DALL-E, okay, DALL-E is translation, right? Okay, have you ever heard about 11 Labs or deepfakes, reface? Okay, so, but we are here to talk also about fintech. I just wanted you to understand what is generally AI. But in fintech, AI using for things like customer service, credit scoring, and fraud detection. And, well, it really helps. Because it's AI helping to resolve 80% of routine customer inquiries without any human intervention. Therefore, different fin institutions and bank and general companies, because it really helps to solve their work. And we know there are lots of chatbots, like a personal assistants that help handle, solve, or requests and questions from the customer. And there's a chatbot, for instance, I think in the US, that using this Erica chatbot that helped to handle over 10 million users and provide the information to them. And of course, AI helping with the fraud detection we'll be talking about further soon. The problem is getting back to our travel story and coffee habits. Let's imagine Sarah. Sarah is a freelancer and she's going to apply for a loan, right? An AI model basically scanning her history, financial history, and noting some spending patterns, because Sarah is a huge coffee lover. She loves coffee before work, after work, during the day, and she is really purchasing coffee all the time. And unfortunately, she got denial of her loan, and she said, like, why? What happened actually? Because AI algorithm classified her at a high risk. A high-risk applicant who spends lots of money, right? And this is usually happen because, Sarah have some patterns, the algorithm learned those patterns and mark her label as a high risk. Same happening with our guy, whose name is Tom. He's a young professional who loves to travel, who has stable income. He's usually pay his bills like everyone else, but he loves traveling a lot, and he usually books low-cost tickets that we used to do, right? So every weekend he is booking a low-cost tickets and go for a vacation. And an AI model noticed that Alex is frequently spending those money on this on the tickets. And the bias data also marked Alex as in a high risk. And as a result, his credit limit is lower now. And why is happening? Do you know? Any ideas? I heard that's biased, right? So we have bias, right? And why AI is biased? This is really critical question. Because AI model, they learn, they often use from first historical data, they use from the previous data that was used by the developers, and it's learned from the open source. Therefore, we also have lots of disinformation online. Why? Because AI data learn from open source, like even ChatGPT that you are using. Lots of disinformation, right? Where it takes data, sometimes from Reddit, which is the platform, but everyone can share their thoughts. So, same with here. So we have AI and this discriminatory and bias. So we have typically in fintech, AI can put two biases. Is a gender bias and racial bias. So, as I said, it's a data imbalance why AI is biased, because data doesn't accurately represent certain groups. And like Sarah, for instance. Its historical prejudice is AI model is trained on historical data where certain groups were consistently denied loans. For instance, we will talk about like black people, minorities, right? And over-reliance on correlations. So, we heard about Apple Card case. So, this case includes a gender bias because in 2019, the Apple Card AI-driven credit assessment gave lower credit limits to women compared to men, even if they had similar financial profiles. So this was an issue with algorithm and its training when historical financial data might have unintentionally reflected gender bias. So we have a case now to learn. Same with racial bias. Do you know that in US we have, like for instance, I took the US, right? There is like minority groups. We have black and Hispanic individuals in US that has been disproportionately impacted by biased credit scoring models, right? And we have the National Bureau of Economic Research. They stated that applicants are 18% more likely to be denied mortgages than white applicants with similar financial backgrounds due to the inherited bias in AI scoring models. So it's historically, right? And I just want to show some examples and explain like real example why it's biased and what data it takes. Because we see like just a map, but next map will be specific. So for decades, all the policies and practices, they used like red lines. So if you had a neighborhood, you're redlining neighborhood of people who live there, right? It can be a black neighborhood where systematically people being denied of the loans. It usually happens. And then the factors like zip codes, credit history, employment history, on educational background, employment history, on educational background. So they are using all this data, the AI, to score later you and to provide you with loan or mortgage or not. So I took example of a recent trip. It's a map of Atlanta City, which is in US. And you can see the dark red color is like where historically black population live. And also there are colors with Hispanic, like Latinos people live. And this is how AI learn those patterns. So we have a map and the AI using these zip codes. And historically, all these people from this territory had been denied of the mortgage or loan. And even now, while learning from this data, will be denied of the loan or mortgage, or may be denied of a loan, right? Because it's the patterns and rules that AI used to learn from. So, because AI doesn't know history. I mean, it's like AI can't analyze. It assumes only the patterns that are valid and then applies a decision to them. And we also have interesting thing like a cognitive bias. The cognitive bias is all about the developers and scientists who selecting data. Because who is behind the AI? We will be talking about responsibility. Who is responsible? Is it AI itself or is it a developer? But here with the cognitive bias, train the AI are responsible because each of us are biased. We all are biased. We have some stereotypes and we have views on different things. And we may unconsciously and with no bad intention to select such data to train the AI. So this is like a cognitive bias when you can select the biased patterns and then it will affect the decisions that will be made by AI, right? It can learn from individuals from inherently lower income or from some individuals who have some type of education, right? Lower education or higher education. So, and it is a cognitive bias. So, what are consequences actually when AI is biased and we're using AI tools in fintech? What do we have? So, loan approval disparities, right? It's also interesting case, the studies reveal, for instance, that entrepreneurs in Australia were more likely to face higher loan interest rates than their male counterparts. Why? Because AI model has been trained that men were the primary borrowers, often rated the female-led business as a risky investment. So having those, that's primary who is borrowing money for the startup, male. Women are in high risk. So it happens that they deny to get a loan or the rates been not good for them. And so it's loan approval disparities. We have also credit score inequalities. And there are also many interesting cases, and I highlighted one cases in China where found the system, they favored individuals with specific job types or educational level. So for instance, if you're from the financial sector, if you have a PhD in law or finance or, I don't know, software engineering, so you probably get this, like, high credit. But if you don't have, like, if you're a person without higher education or you have some other background, you will not get it. So it happens. And we also have the insurance rates and premiums. And it also a case that people that live in low-income neighborhoods in the UK were being charged up to 30% more of insurance than those in wealthier areas. Again, it's about a bias and the data that AI been trained. How to mitigate those risks for AI bias? Any ideas? What can we do? Okay, the right data. Remember this. So first of all, it's fairness audits, right? We need to conduct audits for the company that are using AI tools. And it's audits to understand if you have different varieties of data and if you cover all the people from different backgrounds and marginalized groups of people, first of all. So, and companies should have these audits, and we will again be talking about these sandboxes and regulatory environments for companies to test their applications, to test their AI system if they are fair and transparent. Also data transparency. Again, I know that FinTech using blockchain to create an audit trail of data sources at decision points, make it easier to trace, right, and to understand is it biased or not. And it's usually using synthetic data. What is synthetic data? It's like when you have some data about certain group of people for your AI, right? But you still have a lack of some data. So you synthetically, artificially adding data that mirrors the real data without containing identifying features, just to fill the gaps, right? You know that in general, the situation in the world goes in this way. We have data and we have lack of data. So let's take some data from like general knowledge. So let's talk a little bit about how we can use together AI and blockchain for cybersecurity, which is also interesting because there are lots of threats in cyber area, and the speakers before me been again talking a lot about it. And AI, really a great tool to allow detect suspicious patterns in real time, which is like, for instance, some unattempted logging, or we have lots of attacks in cyberspace. We have phishing, we've been talking. We have DDoS attacks. We have malware attacks. We have lots of types of attacks, and AI is really quick and fast because, again, I repeat, we can use AI for a good and for a bad, as well as we're talking that how AI helps us to detect fraud, but at the same time we can use AI for different purposes, right? And for cybersecurity, blockchain as decentralized security also helps us with the cyber. And we have some cases. There's Japan, Mizuho Bank, and also JP Morgan blockchain, enhanced AI for payment security, what they're using, they are employing, and now it's quite new because I've been trying to understand how exactly they are using AI and blockchain together to secure their systems, right? And they started using this together to secure digital payments. And they have over $6 trillion in assets under management protecting each transactions. So they, again, the pattern recognition, immutable record keeping, and they scans every payment for irregularities and the transfers. But the future is for AI and cybersecurity is for sure, because every year we had billions of cyber attacks. I mean, it's even difficult to track all of them because we have cyber attacks on each of us. You can all get a phishing email, which is just talking like it's this email that send us a link and say open and you will win, or you are a winner of some prize, and just click a link, don't click a link. So, and we also have lots of cyber attacks in financial sector. And the combination of this AI and blockchain will really help to detect threats. And what will be interesting today, we had also a question about quantum computing that we all discuss today. And well, I think it is a real threat, the quantum computing together with AI for the blockchain, because you can imagine how, because now to hack the system, it's kind of impossible. Or if you want to hack any system, you need to spend lots of time on it to get what you want. But how it will be easy to encrypt the data when you're using quantum computer in minutes. It will be super easy, and it's kind of for blockchain, again, to understand that, again, we need a development in this area and more protection and more encryption and security. So, as I said, cyber criminals are increasingly targeting financial institutions, and the World Economic Forum predicts that by the 2030, 80% of banks will use some form of blockchain to secure digital transactions with AI, providing real-time threat detection and mitigation. And let's talk about data breaches. I think I have some more. I have time, right? Okay, 5 minutes. So, data breaches, and I just want to move this slide. Maybe I'll come back to this later, but I want to talk about this. Have you heard about 11 Labs? I told you. And do you know what's going on with that platform right now? And how it's easier to get money just by using this voice cloning. So, and we know if you just Google it, there are lots of cases now popping up that lots of criminals using different AI tools to get money from the tech sector and fintech sector. For instance, it's one of the case that a branch manager received a convincing email from like a headquarter or a director that it was actually a voice, it was a call, it was real voice, and even an accent, because it was, I think, headquarters in Germany, and his director has a German accent, speaking English, and required him to send like 35 million of USD to the account. And actually it was also followed by the couple of emails, which is like also been faked. And what happened again, the company sends those money because they trusted, they thought it they're like some from headquarters, right? Other director, which is a real threat. And now we live in this world where it's like a AI, voice cloning, and deep fakes is our reality, and we need again to understand how to detect all this AI disinformation, AI like cyber threats, and to protect ourselves, protect companies from these threats. So, again, what will happen if we're using AI and blockchain? First, we have this detection speed. The AI pattern recognition allows financial institutions to detect threats 10 times faster that are traditional security systems. And we have, of course, cost savings. If we'll have more applications using by AI, the companies will save more money on the cybersecurity. Okay, I don't know if I have time to talk about these adaptive methods and large data volumes. Maybe I will move a bit further to talk about data, how much data we need to give to AI system about us, right? To learn, right? Is it like in financial sector? Is it financial history, location data on spending patterns? Do you think it's okay to give it, and are we secured for this? We've been talking about it a bit. Someone said about the right of being forgotten, right? So this is the right to be forgotten is GDPR, and that each of us has a right to request for deletion of our data. So, and we've been talking about blockchain, of course. Still, do you think it's can we request for deletion of our data while it's in a blockchain or not? Right. It's the purpose of a blockchain to secure our data. And there are some ways if you can delete data if it's like what? If it's off-chain storage of personal data, right? Well, it actually is of something different. But also someone from the speakers said like if it's a private blockchain, it's also kind of possible. But in general, no, the data will be stored. And to delete data, those data from blockchain, we need to make lots of changes in the chain system. So it's kind of impossible. And well, the problem is all this data that we provide, who controls the data that we give, and who is responsible for those AI models that make unfair decisions? Those decisions about our coffee habits, and we can receive a loan from a fintech institution, from financial institutions, or we can get a mortgage just because they are tracking. So who is responsible for those biases? Service provider.
It could be the owner, or it could be any company who has services from a company and further provides it to end users.
Okay, any other thoughts? Okay, so there is a thought that it should be a responsibility of everyone, with this collective responsibility, right? When we are responsible, because this is a company, right? There are developers who put the data to train AI, the company who uses those AI, right? So, I mean, every part is responsible, but in the end, there will be only one, if you talk. Or you can put the responsibility just on AI and say, like, I'm not here, it's not me, it's AI system that is responsible for this decision, which is really now is ethical questions, and it's difficult question to answer. But the right be forgotten, we mentioned. And again, the who controls our data and how to be sure that our data is secure. That's the questions. And we are talking here also about transparency, because people, according it was IBM survey, 80% of consumers feel they should have more control over their personal data, especially in financial sector, right? They need to know like where it's used, how it's stored, how to delete, is the data going to the third party or is someone is using our data, because we know that our data is somewhere like flying in the internet, and why it's online, it's always online, but still we want to be sure that all these companies acting according with the GDPR, like, or other regulations. And just if I have last minute, I want to talk about this as like really a GDPR is a really cool thing for Europe because it protects, but we also have an EU AI Act. Have you heard about it? This is also regulation that we have, and it aims to set standards for AI use, especially in high-risk area like finance. And in AI Act, we have different types of risks. And again, it's talking what AI should be forbidden, right? We cannot, for example, use like real-time facial recognition videos because it collects other biometrics. Like it's kind of very sensitive, and sensitive information is collecting like online from us, but we can use other forms of AIs. So, but it should be all regulated. And this is like the GDPR and this AI Act now, which is quite new, and it will be more, I think, regulations like this. But importantly, that we need to regulate all these technologies that are using in financial sectors. And as I said, we need to create regulatory sandboxes, environments for those technologies to be tested before we are using them. Because the technologies are biased, they need to be tested if they're biased, if they're transparent, how secure is the data in these technologies. I think I'm on time. I hope so. Thank you.
Thank you very much. We have one question. We have two questions. If we have three, I'm going to break and you will find it there.
Thank you for your presentation, Anna. I have a question on the US versus EU approach on AI regulations. The US obviously is more towards a light touch approach, and it has different results. I think we don't need to wait for AI to see that. The current global tech scene is dominated heavily by US global tech companies, except for in China, for different reasons. What are your thoughts on European competitiveness when it comes to these more restrictive policies that aim to secure security, but in the long run actually lose certain tech dominance to a different country, and then it ends up EU has to compromise because they need to catch up, and basically lowering the standards of certain regulations to catch up in some instances. What are your thoughts on that? Yeah.
Well, it's an interesting question, difficult. Indeed, EU is really well regulated, I must say. I've been trying talking about the US, and been talking about this as even like AI regulations. I found they have in California AI Act, right, something similar like to AI regulations, but not so many like legislation in this area of work. And I think that first of all, that of course it's about competition on one hand. If you're talking about like who is more regulated, is it EU? US, China, but also it's all about the environment and the thing of how everything works in the European Union, right? We have the directives, we have laws, legislation, and it needs to be regulated because all different countries, they have national legislation, right? And we all have our own regulations, but it should be somehow to regulate this whole system in general, because lots of different tech companies, if they're doing something on their own, they're not like, you could say like, why we're talking just about you. We're developing a tool, right? And according to our national legislation, but we are not compliant with other standards from another company, then we cannot use this tool in another country, right? So we have regulations, we need to comply with those regulations to be able actually to use this tool and to let people use this tool in different countries. And I think that also it should be a synergy between like, if you have your regulation, and in the US or in other country like in India, in other countries we don't have the regulations, for instance GDPR, right? We cannot use actually like, for instance, data, right? We can be sure that data is secure in that country if it's not regulated by the secure law legislation and it's not complied. I don't know, maybe I didn't hear your question directly, but you can.
It's US products. Well, why are they
Well, this is a question to you.
If it's more than 2 sentences, you will see him in the break. If it's one, we can do it.
Well, it's actually very complicated questions to one sentence, because it's not just answer like yes, they are like why they're not regulated. It's very complex. It's policies, you know. And if you're talking about the policies and how they made, it's like, you know, talking about the sausages. You know what it is, but you know what's inside this, you know. But I think we can talk more about this issue.
And I had something similar, but it will be mostly like a remark, not a question. So I wanted to raise a topic which related to end users. So from one side, yes, because of those regulations, there are businesses in AI, for example, which are more prosperous in the US, for example, than in Europe because of a lot of regulation. And this raises the question, how many regulations is enough for businesses? Yeah, but for end users, it's as well a big question, and I can give you an example. Apple with their intelligence, yeah? So they are going to run Apple Intelligence, which will be available in the US, but it will not be available in the EU. And from one perspective, yes, poor Apple, they will not get money from the EU, they will raise only fundings in the US. But from another perspective, me, as an iPhone user, I want to have this feature. And okay, I understand maybe that I need to give away some of my rights related to my data. But maybe I will to do this. I'm willing to do this in order to get this new service. But I cannot because of regulations. And to find this golden middle is pretty much difficult. But it doesn't look like the EU is trying. It looks like the more regulation, the better.
That's correct. And, well, EU has lots of regulations, and I think it's just the start. Because technology is something new to the EU, and talking to some members and representatives, that what I understood, they even don't have idea what's going on and what to do with it. That's honestly, and this is like kind of for these questions. Technology is such a new area, and everything is also about the bureaucratic processes, how long it takes to, for example, even the for AI Act, it was been talking, people been talking about the AI Act for so long, and it's not perfect. Therefore, because in each, yes, it's a draft. That's the point, that we have lots of gaps in those regulations, and we can have lots of new laws to fill those gaps, but can you imagine how many legislation we will have and for this? So I think it would be of course ideally to have this regulation similar to all the countries. Like yes, in US they are having some regulations, they're doing work, but again they're also struggling with the regulations. In EU, and at least we need some balance to have it similar regulations to be able to, as well as us, as you said, end users to use the service.
Sometimes it's better no regulation than any regulation, like the EU did with this AI Act. Because basically this AI Act caused more problems than gave solutions.
No. AI Act.
It opened many doors, and now companies just confused in which they can.
One big misconception with the AI Act is that because of the pyramid structure and the risk structure, AI Act is a pyramid of risk. If you have an AI that is super risky, you have a lot of regulations. If you are an AI like a spam filter, you have less regulation. But AI Act did just one thing, said, if you are scoring, if you have social scoring, you are prohibited. If you have work data or biometric data in order to assess personnel, you are prohibited. If you have problems like nuclear weapons, anything that can endanger human life, you are prohibited. In principle, this is the best law that we can have in terms of protecting actual humans from companies that will very easily do social scoring, very easily do assessment based on your AI working hours because they have machine learning footage, very easily give access to autonomous weapons, and we are going to see a lot of autonomous weapons. The problem is that we need right now not only an AI Act, we need the Geneva Convention for AI. The problem is that all these conventions, the Geneva Conventions, are happening after the shit hits the fan. Something goes really, really bad. So we need to be proactively, EU tried to be proactively. Of course, they stifle innovation in terms of even the user. Yes, I want also the fancy artificial intelligence Siri to tell me whatever, and I'm willing to give whatever data and money to Apple. I'm an Apple fanboy. The problem is that when a company, for example, start using these technologies and says, I'm based in Europe and I have problem with the AI Act, okay, move your business to the US. Go to a jurisdiction that is friendly. This is, for example, something that all blockchain companies do right now. We are in a free market, it's open out there, it's okay. So in terms of business, we don't need to complain. In terms of humans and AI, we need to start be proactively. Okay, I'm not saying that Terminator is coming and it's going to kill us, but we need to understand the complexity. Thank you very much. We have a 10-minute break, please, and come back. Thank you very much, Anna. Thank you. a facilitated one, okay? So you are going to select 3 topics as regards blockchain, disinformation, AI, whatever topic is related to the subject. Please don't pick US elections, okay? Topics that are relevant with our conference. And we are going to create 3 topic stations, okay? So imagine that we are going to create 1, 2, 3 topic stations, and you will have a discussion between us to each station, and then I'm going with a microphone to have some. Okay, great. So let's start with the first topic.
I have several, but here's one because it just came out today. Okay, all the predators in the crypto space. There's so many of them.
Okay.
Yeah, not just the cons, but did you guys hear about Eugene Wynn? Okay, generally, there's like a ton of predators in the space, like the crypto bro predators. Is that not appropriate for this conversation?
We can broaden a bit.
Is that okay? Maybe not. Maybe that one's not appropriate. That's okay.
Let's speak. Let's speak about threats, not just predators. So you have one, okay?
That's okay. It's not appropriate. It's okay. It's okay. It's not appropriate.
But we can merge that one into this, I think. Will AI, crypto, also decentralization of the data, dehumanize the world?
Okay. So we have a very positive one, like if AI and crypto dehumanize the world. So you can go there in the seats there in order to form the station. No. So we have here one station. All the people that they want to discuss about dehumanization of this world, you can join this station, okay? Do we have any other topic that you have in mind? I see you. I see that you have something in mind. Yeah, for sure.
So this year was an election year in many different countries, yeah? And I would love to explore the topic, how can we use AI and blockchain technologies to avoid manipulations and fakes and all the other stuff which influences election.
So, elections, manipulation and misinformation, and AI and election and manipulation and misinformation. Okay, so we have another topic station here, so feel free to join. And I see one more. I think that we are enough. I want everyone to move to a station, or pretending moving, but do it.
We are together justifying the DeFi.
Justifying the DeFi. Yeah. Okay, sounds fancy. So, justifying the DeFi. We have one more station. So, I will give you like 15 minutes max in order to start discussing, and I will put some music. The outcome will be just 1 or 2 sentences that you can share with the rest of the crowd. Imagine that you had a discussion and you had some kind of ideas. You explore something to describe this. Okay? So, in 15 minutes, I will ask you, each content station, to give me a brief of what you discussed. Don't be shy. Go